Potential. I like that. Happy Heckle Day. Bring it, Ron. Guys, I am 32 flavors of feeling good today. We're going to have a great day. It's going to be fun. We're going to do some stuff. Hey, Nubis. Good to see you. Um, we're gonna do chart reads, guys. We're gonna hopefully look at the live market a little bit. That's up to you. And I'm gonna tell you right now, when you guys keep us from looking at the live market because you have so many awesome questions and charts to post, that's what makes this classroom amazing. So watching me trade will not make you a better trader. You trading, you practicing, you posting, that's gonna make you a better trader. Trust me on this one. Been there, done that. Guys, news is done and over for the week. No more high impact news. I check this every morning to make sure I don't step in front of a freight train of emotion. Never seems to work out. I've talked to people like, yeah, I'll totally hedge the news. We had a great example yesterday where this was the opposite of what should have made the market go up, and the market went up anyway, guys. You'll never know what the market's going to do. I'm going to tell you that right now. But here is the cool thing. Good morning, Sergio. You don't have to know what the market's going to do to make money in it. What you have to do is start to recognize some patterns that the market repeats. Latch on to your pattern, whichever pattern makes you happy. Doesn't matter. I'm not here to judge. But when you have a trade, we'll say, that you know wins more than it loses, and I'm going to use just one of mine as an example. I know that with this look on the large chart, with this entry on the small chart, if I do the exact same thing every time over the course of a week, I'm likely to win about 70 to 80% of these trades. Is everybody with me on this? What I've done is I've established a pattern that creates an edge that can be proven that it wins more than it loses. And because I know for a fact that I'm going to see more winners than losers typically if I take this pattern, when I get in, I'm not nervous, I'm not anxious, I don't worry, and most importantly, I don't know if I'll win or lose. I never know if I'll win or lose. But I do know that I'm likely to win more than I'm not. And guys, when you believe in this, when you study this, when you prove this, this establishes trust. And trust will help keep you from doing silly shit. Pardon my French. And Victor, can I use your chart as an example? And I hope you don't feel like you're being attacked, because you're not, because this is a brilliant example. Victor, you went outside of your plan on this trade, and I don't disagree. Man, you had momentum on both charts. Life was good. And Victor said, hey, I'm just going to jump the fudge in because I appreciate the advantages being presented. But Victor, I want you to see something super important. The moment you stray from the plan that you trust, you start using words like this. I got suckered into an exit. No, you didn't. You were nervous because you don't trust the jump the fudge in trade. You were nervous because you knew you broke rules right here, and you were afraid that it was going to come back and bite you in the ass here. Does that make sense? I know because I've done this 100 times, guys, and most of you will probably agree with me, all 12 of you in the room. When you break your rules, you're more likely to move stops where they don't belong. When you break your rules, you're more likely to change your profit targets that you would take. So one of the things that's so important is you've got to develop trust. You've got to believe in what you're doing. And if you don't, your emotions will get the best of you. So that was a good lesson right there. And that's a lesson straight out of my playbook from learning to trust the indicators. Can you guys hear me? Are you all just like, holy crap, that was brilliant. I can't believe you just said that. That's probably what's going on. We're going to have fun today, guys. This is what we're going to do. And I'm going to change it up a little bit. We'll just do this. Huh? Ron. Heckle day. Guys, first of all, let me say, where's that picture? There it is. I'm not here to tell you what to do. I'm not here to tell you how to do it. I'm not here to tell you to get in, to get out, to manage one way or another. What I'm here to do is to teach you how to read these amazing T3 indicators so that you can make good decisions. We will talk about both TradingView and NinjaTrader. They are similar but different. And what we're going to do on either platform is we are going to learn how to catch a trend trade. We're going to learn how to find a trend trade, which means that we're going to let the market establish a trend. And then we're going to patiently wait for a fight, because there always seems to be a fight. And then we're going to pinpoint right where the fight is most likely to be lost, and that will be your entry for the highest probability trend trade, whether it is NinjaTrader, which is what we're looking at right here on a small chart, defining entries, or whether it's TradingView. Now, there's a lot that happens in between trend trades. There's a lot of opportunities in between trend trades. If you can't work off of the very basic rules and know what it is that you're looking for, it becomes more difficult to see the other opportunities. So when you start and build this beautiful foundation, what happens is trading becomes easier, and trading actually becomes less stressful, and trading becomes rooted in confidence rather than fear of loss. Because when you don't trust, when you focus on the money and not the plan, you will also focus on the possibility of losing, and that's going to scare the crap out of you and force you into bad decisions. I know, I've done it, I've been there. So we're going to learn to read charts, guys. We're going to learn to recognize advantages. We're going to use 3 rules, 2 charts, regardless of the platform, and we're going to focus on the advantages that create a trade. Man, there's nobody here today. I guess I pissed everybody off yesterday. We're going to do it on NinjaTrader and TradingView, guys, and we're going to go through that concept that the market trends, fights, resumes. That the market trends, fights, resumes. And we're going to learn rules to capture that amazing trade. So in the room, already, I believe, maybe not, I'm giving you right now, first the PowerPoint that I used to teach. I'm going to give you a plan for NinjaTrader, a plan for TradingView, and study spreadsheets for both. I'm going to drop those in the room right now. Whether or not you download them is up to you. Both plans have rules. Very precise checklists to enter the market, whether it's NinjaTrader or TradingView. Very concrete, irrefutable, 100% specific to the cause, what your rules are, where you find them, and a checklist for entry, even a place to put your initial stops, and we'll talk even about management. The same is true for the NinjaTrader plan. Now, my hope for you, and there's some of you that are trying to get your groove back, if you will. Learn the very simple rules. Learn the very basic rules. Learn how to trust that one trade that you can prove wins more than it loses. And then when you learn that high probability trade, it does open the door for the rest of the trades. My buddy Ron will tell you that the high probability trend trade is not your get-rich trade. What it is it's the gateway to being able to see your get-rich trades. So we're going to focus on the best of the best. Simulate. Guys, simulate and practice in the room. One of the things that happens is when you post in the room is you get feedback. That's my job, is to look at what you told me and to give you feedback, because I'm going to be real honest. Very often, you won't see the mistakes that you're making in the moment. You'll say to yourself, this was the perfect trade and the market sucks. This is the perfect trade and the plan is wrong. This is the perfect trade and it should have won. And guys, the reality is, this is brand new users. We're going to make mistakes. We're going to fudge one of the rules. We're going to misunderstand one of the rules. If you post in the room, you'll get a private session with me. And that private session is going to focus on your ability to read your charts. And it's going to not only say, hey, this is where you made a mistake, or this is where you could have done it better, but it's going to say, hey, this is how you fix that mistake. And here's precisely how you can do it better. And I had an awesome conversation with somebody yesterday. And I always tell you guys, reach out if you need help. This gentleman did, or this woman did. I won't give it away. But what happened is they said, "Hey, I'm struggling right now, and I don't know why. I can't seem to pull a winner out of the market." And he sent me 6 pictures, I think, and or 5 pictures, 5 pictures, 5 trades, and all it took was 3 minutes for me to look at his trades, to identify his reoccurring problem, and then to sit down and say, "Hey, so tomorrow, let's fix one thing." Right? Let's fix one thing. Let's fix the thing that seems to be creating more losers than winners. And the cool thing is the 5th picture was the perfect winner where he didn't break this rule. And guys, we don't see it in the moment. All we see are the losses. All we see is the money that we're not making. So take a minute, post in the room, get that feedback, guys. The people that post the most, especially the people that post the most losers, these are the people 6 months from now that tend to be posting the most winners. And then simplify. Hey, good morning, Luciano. Good to see you. Simplify. Keep it basic, right? Keep it simple. Keep it focused. Let the rules be very black and white in the beginning. You've got to know what looks you're going to commit to. Every trade is a pattern. Every trade has a look. Every trade will look the same if you're following your checklist. You've got to learn that pattern so that it becomes easy. And that's the second part to getting to where you want to be. And you get to hear that melodic voice. I hate my voice. I'm glad you guys like it. Guys, I just gave you a spreadsheet. I'm going to show you the spreadsheet. This is the NinjaTrader version. On the first page is what it means to have your rules met. I've done a lot of work for you guys. This is like 60 pictures, 67 pictures of what it means to have rule number 1 met precisely, with the verbiage and the look side by side to make sure that you never make the mistake. And what it means to not have that rule met, when it's better to sit on your hands and do nothing. The same with rule 2, the same with your entry. There's also like 400 pictures of client trades showing you the pattern that it is that you're studying, guys. Exactly what it looks like. Exactly what the pattern is. There's ideas for NASDAQ. And I'm going to tell you guys, if you're brand new and trying to trade the NASDAQ, it's tough. The NASDAQ's fast. You got to be in tune with what you're looking for. There is the management. This is the management right here from the KISS plan. This is the entry sequence from the KISS plan, guys. Learning the patterns, knowing what it looks like. Patterns that repeat themselves are what's going to start to jump out to you when you start focusing on advantages. And this is where you begin to write your plan, where you start to go beyond this very basic. There's a place for you to put the pictures. Every time you post in my room, and I'm like, whoa, that was the perfect trend trade. Great job. Put it in your personal trade setup looks, right? This is what it looks like if I'm going to take a long trade. This is exactly what my pattern is, what it's going to be, how it's going to be, when it's going to be, and that's what I'm focused on every day to give me the best chance of success. And then finally, there's the trade tracking sheet. Both spreadsheets have a trade tracking sheet. One of the most common things that I hear is, well, I don't really track my trades. I take pictures, but I don't annotate them. I take pictures, but I don't go back and look at them. I just take pictures because Mark said take pictures. Guys, if you take a picture of every trade that you take, I'm going to show you how this works. In the beginning, we're focusing on study this morning before we get to entries. I don't know if you guys have noticed that. So in the beginning, you're going to take pictures, and man, your annotations are hopefully going to address the 3 rules that it takes to enter the trade: momentum, clear path, and entry. And you're going to write exactly what you saw. And that's good. That's what we want. I want you to tell me how you're reading your indicators so that I can make sure that you're reading them accurately, so you do understand the concepts that create the trade. And every time you get this and you drop this in the room, I might say something about your trade. I might say, that wasn't a clear path. only potential may need to manage, right? Just a little something to help you have a better chart read. And then your job is to post that trade in your spreadsheet and don't skip the feedback section. Even go back and re-annotate your charts. And if you do this every morning, and I'm telling you right now, I feel so confident about saying this. If you do this drill every morning, 3 minutes every morning, go back and look at what you did yesterday and ask yourself what worked. Guys, you will begin to recognize the things that are bringing you success. And usually it's following your rules. Holy crap, I followed my rules and I won the trade. That was amazing, right? You're going to be focused on your rules. But guys, you're human. You're also going to see things that didn't work. Those things that didn't work, if you don't analyze them and see them yourself, you'll get the feedback if you post in my room. The tracking sheet doesn't appear when you download it. So when you say, so you're downloading it straight from the room and it doesn't appear. Try this, Nubits. Let me get a blank screen. So try this. Just straight from the chat box. Can you see the chat box? Take the tracking sheet and left click on it and just drag it over to your desktop and put it right on your desktop and see if that works for you. It's odd that it wouldn't download. Are you getting a danger zone message from your computer saying Mark might be a Yahoo trying to poison your system? You will have to override that if you've got a really secure system. And if not, let me know. Give me your email and I'll email you a copy of it. I'll be glad to do that. Whatever it takes to get this in your hands, guys. Because when you go back and you look at this spreadsheet every morning, you're going to start to see your thing, right? So feedback shows you the reoccurring challenges and victories that you're experiencing. Embrace and focus on the good, guys. When you ask yourself what worked, write it down on a piece of paper in front of you. Man, when I have strong triggers, life is good. When there's nothing in my way, I feel unstoppable. But even more importantly, guys, and this is the hard one, right? Hey, good morning, Sid. This is the one that humbles us a little bit. You've got to identify what didn't work. And that's what we did for the gentleman yesterday, is we realized that no areas inside of triggers was the bane of his existence. And he was losing 80% of his trades when he traded from the wrong side of the triggers and didn't wait for the perfect entry. So our course of action, because you will get a course of action, as I said, hey, let's do this. Let's not chase profits. Let's not try to make it all back today. But if we do nothing else throughout the course of the day, there will be absolutely no entries taken if it's not from an area inside of triggers. And I said, let's see how it works. And we'll find out how it works, right? I'll get feedback from them. But guys, this feedback is going to have you recognizing the good and the bad. It will accelerate the learning dramatically. I'm telling you right now, it will accelerate the learning. Hey, Melinda Novak, I see your shining face in here. And what it does, guys, is it sets you up for the day. It keeps you focused on the good. And it keeps you focused on missing out on the bad. So we're going to learn the rules. I want you guys to practice. I want you to break all the eggs, make all the mistakes, but post them in the room so we can learn how to fix them. And just keep it simple. Keep it focused. And we're going to start with NinjaTrader. And we can't get much more simple than 3 rules, guys. 3 rules. Creating the highest probability trend trade, putting you in a position to take a trade that typically wins, has the potential to win 70 to 80% of the time. Now, when a rule is true, it creates an advantage. And a trade isn't your desire to win or to show off or to create a popular circle where everybody likes to dance. Guys, a trade is momentum and path and entry. That's it. It's 3 things that come together to create the perfect trade. Now, I'm going to tell you right now, if you learn momentum and path, if you focus on those first 2 rules, you get good at those first 2 rules, this is what it looks like before you take a trade, guys. Momentum is going to be hard to stop. And a clear path means there's just nothing to run into on the way to wherever you're going. So momentum and path are the core. And then your third rule is going to be designed to put you into the market right where that little fight is most likely to fail. It's going to allow you to reduce risk and maximize profit potential. It only takes 2 charts to prove these rules true. Thanks, Nubis. And then even more, guys, it takes 1 bar on the large chart. That's it. Gosh, I feel like the teacher is over my shoulder in a presentation. Belinda's in here like, don't you screw it up, Novak. Guys, in this 1 bar, you will be able to define direction, momentum, and areas. 2/3 of the advantages that create a high probability trade are found just in the most current bar on a large chart. These large charts are slow charts. They're very broad strokes of a brush, guys, and they show the overall opinion of the market. Haha, she split. Rules 1 and 2 are met on the large chart, guys, and if they're not, it's okay to not go to the small chart. There's a lot of waiting in trading. But when they're met, you're going to use a smaller chart, a faster chart, a refinement chart, and you're going to see the inner workings of that 1 bar. You're going to see the fight. You're going to see the failure if this is going to be one of those winners, and you're going to see the continuation. All of that happens inside of this 1 bar. And it's this refinement process that allows us to really reduce risk and to really maximize profit potential, because it's going to put you in right where that tail is formed on a large chart. Now, we can't predict where the tail is going to form using this big slow chart, but we can by using rule number 3 on a smaller, faster chart. So 2 rules, 1 rule. And we do it because there's a force behind the market that is not us. One of my favorite phrases, and when you close out TradingView, they give these little messages. It says the market doesn't care about your position. And they don't even know you exist. But we have this insight into what the people that control the market want to do. Let's call the large chart the large crowd. These are the men and women, the institutions, big business, the 1%, the man, whatever you want to call them. These are the folks. New sent file. I don't know what that means, Master B. These are the folks that establish trends and create momentum in reacted areas. Oh, no worries. No worries at all. Is Nubis your son? How cool is that? I love the father-son stuff. Oh, man, Nubis. Master B is going to tell you how to work because he did the work and he's killing it. So Master B, hold him accountable on the study. Don't let him think he's just going to cruise through this one. Guys, your large chart is going to set you up for success. These are the folks that typically win. These are the folks that we're in line with when we follow the methodology. The small chart, guys, that's the small crowd. These are the hoodlums. They create pushes. They establish that fight that we are going to pinpoint right where it's most likely to fail to take that amazing trade that typically wins 70 to 80% of the time. And we're going to do it with some indicators. Horizontal lines on a chart are areas, guys, and they all have names. There's a divergence high and a divergence low. And what I want you to keep in mind, and this will pay dividends later, is that divergence is synonymous, it means the same, as a loss of momentum. Every time you see a divergence line, you can say, oh my gosh, the market lost momentum right at that exact price. The market lost momentum right at that exact price. And these lines that are created can be bouncy. You're going to see Fibonacci resistance and support. And when the market reaches one of these lines, they can be bouncy. And you're going to see yellow 1-to-1s. And when the market gets to one of those 1-to-1s, it could, in fact, be bouncy. Areas are bouncy. Whether it's big chart or small chart. Write that down. It's a fun little way to remember it. And then we're going to use triggers. And trigger lines tell us everything. Trigger lines are the most useful resource on your chart. There are small triggers. It's 2 solid lines. They're a fast-moving average. There are large trigger lines, 2 dashed lines. They're a slower moving average. Trigger lines When they're green, they're up. When they're red, they're down. They're going to look the same, whether it's a big chart or a small chart, guys. The indicators don't change based on the time frame. We're going to use trigger lines first to define the amazing momentum. Rule number 1, strong triggers. We're also going to count those trigger lines when the market reaches one of those bouncy lines, and we're going to see if that area has the potential to stop and reverse the market. And then finally, we're going to use those big trigger lines, those slow moving averages, to define our perfect entry on the smaller, faster chart, guys. Trigger lines show up in everything you do. So we're going to use areas and triggers to embrace the kickassery, the highest probability trend trade Nexgen teaches. And we're going to break down each rule individually. I'm going to give you a visual of it. If it's not clicking, let me know. We'll find a different visual, guys. Rule number 1 says that the large chart, the big chart, the slow chart, the large crowd must have strong trigger lines, because we insist, as prudent traders doing good things with our money, to have the advantage of momentum. Strong trigger lines is one look. Strong trigger lines is or is not. It's very black and white, guys. In an uptrend, when your background is green, your cheat code is that both the small and large triggers must also be green. And when the background is red in a downtrend, they must also be red. If the colors don't match, rule number 1's off the table. You just can't have it. If the large are green and the small are red, you don't have momentum. If the triggers are red and the background is green, you don't have momentum. So let the colors match. And then it's just one look on the most current bar. So I'm going to back it up and I'm going to go to the most current bar right there. Strong triggers is one look, guys. It is separation between the small and large. When in an uptrend, when the small break above the large triggers and the large triggers start to get wide and open up, a gap between the two. Separation is strength. That's what lets me know that I have strong triggers. That's what lets me know, here it is going in a downtrend, that the odds are favorable for the market to continue in the direction of the trend. And you guys are going to see it annotated on a chart all day long. OFM. I'm going to bring this picture up because I think it's important. We'll hit it later. Odds favorable momentum. When I have strong triggers, little gap or big gap, right? Small gap, huge gap, separation is strength. When I have strong triggers, the odds are favorable that that large chart is going to continue in the direction it's going. Strong triggers will be the look that helps us feel like the market has the potential to break key areas. Strong triggers will even cover some of the mistakes that we tend to make as new users, because let's be honest, strong triggers are hard to stop. Strong triggers push. And if you don't have separation, you don't have strong triggers. How easy is that? Separation is strength. No separation is weakness. And if I have weakness, I don't know what's going to happen. Anything could happen, up or down. And with weakness, this is very often where you see a market reverse from the middle of nowhere. There's weakness right there, right at a key area. Areas more likely to hold with weakness. Weak triggers, no separation, right at a fib. Big untradeable bounces. Weakness right at a fib. There's your reversal that started the downtrend. Weakness just above a fib. Big old ugly bounce. Weakness from the middle of nowhere. And sure enough, it goes up. And then when you start to see that momentum, areas break, guys. The potential is so much higher for areas to break when there's separation between the small and large. And your strong triggers will be identified on the very first bar. If there's no separation, there is no strength. And let's go to crude oil. Very first bar. If there is no separation, there is no strength. And if there is separation, that's what it'll look like on the most current bar. There is strength. Is everybody good with that? Can you give me a Y in the room? If that makes sense. It has nothing to do with areas. It has nothing to do with price bars. It's nothing more than a separation between the small and large, guys. That's it. Cool. Once you have momentum, you start to get excited. You're like, whoa, this is a market that's going to be hard to stop. But a termination condition can, in fact, stop that market. And a termination condition is a Fibonacci-based indicator. A Fibonacci-based indicator with the potential to reverse the market. I'm going to go to the instructions, guys. I don't know if you knew this. Every question you ever had about this software is answered right here. But I want to go to termination conditions. I want to show you. A termination condition is a Fibonacci-based indicator with the potential to stop the market, to reverse the market. And it can be any of those bouncy lines. It could be Fibonacci support, Fibonacci resistance, yellow 1-to-1s, those divergence highs and lows. These are all solid horizontal lines on a large chart that could stop the market. Now, 3 divergences in the same place, same area, 3 losses of momentum in the same area is also a termination condition. And your large chart midband can behave as a termination condition if the large triggers are a full bar away. But we're going to focus on the horizontal lines first. We're going to focus on the idea that we know where the market has the potential to reverse long before we get there. And all we're going to do is we're going to let the market get there and we're going to count some triggers. So on the large chart, the first step is price reaches the area. Your dynamic Renko bars, if they're going up, they reach an area of resistance, horizontal line. If they're going down, they reach an area of resistance, horizontal line, or support, excuse me. Once price reaches support or resistance, we're done with price. We don't need price. Price is in the rearview mirror. It has nothing to do with the equation. You will ask yourself, where are my triggers? And if the answer is that all 4 of your trigger lines are still below that horizontal line acting as resistance, that area of resistance could reverse the market. That area of resistance could create a big ugly bounce that pulls you out of a long position. That area of resistance could break. Guys, you will never know. You will never know what's going to happen. You'll never know what the market's going to do. You don't have to know to make money. But rule number 2 is established because when price reaches a line and absolutely 0 triggers break through, that area is more likely to create a loser if you trade directly into it than it is to create a winner. It's really that simple. It removes your edge. So here's a look where price reaches an area, the area doesn't break 36 times over the course of about 11 hours. Now I know that's like, oh, that's frustrating, that sucks. That was the day before Thanksgiving. But the methodology, having rule number 2 in play, is designed to keep you from giving money away into areas when your indicators say that area could take your money. So price reaches, where are my triggers? That's your recipe. 0 triggers. The plan says just don't initiate a trade. Don't start a long trade right here directly into resistance. Don't start a short trade right here directly into support because it's more likely to lose. That Ricky, what is it, 60% of the time? It works every time. Now areas break, guys. Areas break all day long. This is where we start to see more of the potential. Guys, everything begins. If I'm not in a position and price reaches Fibonacci support and all of my triggers remain above support, I'm just sitting on my hands. I'm waiting for the reaction. I don't know what it's going to be. Our opinions tend to be wrong. I'm just going to say that. My gut feelings tend to be wrong. If that area is really going to break, it's going to start with the potential. And the potential to break is when 2 triggers smash. Embrace that word smash. Not peek their head above, but literally go blasting through that area with momentum. And if 50% of your triggers are through the area, it'll be the smalls. And 50% of your triggers haven't made it yet. That'll be the large. This is what we call a 50-50 look. How's that for clever? And a 50-50 look lets me know, hey, this area does have the potential to break because of all that great momentum behind it. 2 triggers is not your best look. And for you guys following the KISS plan, the rules will tell you for entry on that 50-50 trade that you really want a 75-25 trade. You want 3 trigger lines below that area of support, and then the second trade on the plan that I've given you gives you the opportunity to capitalize on that potential with what we call a medium probability trend trade. So it's going to need to be managed assertively. It's when all 4 trigger lines, both small and both large, get below support that support is considered broken, that now the path is clear. And with that momentum, you'll be looking for an entry on your smaller, faster chart. And your path will remain clear until you hit the next area. And then once you hit an area, right back to number 1. So guys, what we're doing is we're counting triggers when we reach a line. So price reaches this divergence high, and none of the triggers have broken above it. And that's a termination condition. I choose to sit on my hands. And then it got to the Fibonacci resistance right behind it, and no triggers have broken through. That's kind of a picture doing double duty here. No triggers, no trade. Is everybody good with that? That's the one. Rule number 2 is the most broken rule because rule number 2 demands patience. If 2 triggers break above with momentum, it does in fact have the potential to break, but guys, it's only potential. It's not high probability, and it's not even your best look, which is why it's red. But when 3 triggers get above that area of resistance, now that area really has the best potential for a breakout, guys. And this is the trade on the KISS plan that'll put you in a medium probability trade, which, believe it or not, will be the majority of your trades. But when 4 triggers get north of resistance, guys, the path is clear. And that path remains clear until you hit the next area. And this is the best look. This is exactly what your chart will look like when you turn your head to the smaller, faster chart to look for an entry. I want to show a picture real quick. And I just had it in my head and I totally forgot what I was thinking. Well, there we go. Lost thought. It's gone. Best of the best. There will be times. There will be times. Somber, sad voice, guys. When your path is not clear because areas are stacked. There will be times when you won't even go to rule number 2 because you don't have momentum. This is 90% of your day. 90% of your day will be waiting for the advantages to show you the pattern that you have proven through your study wins more than it loses. Don't take my word for it, guys. Learn these rules. Try to prove me wrong. You'll be here forever. It's okay. The futures markets trade on average $220 billion hourly. The S&P, which most of you are probably going to be trading, is exchanging about $174 million a day. The NASDAQ, that's what I personally trade, exchanges about $270 million a day. Guys, you don't have to be in every move. I remember what I was going to look at. You don't have to be the first one in. You don't even have to be the last one out. Guys, your highest chance of success, here we go, boom, 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 boom. This picture is actually labeled easy. Your highest chance of success will be when your large chart has either broken through an area, all 4 triggers with momentum, room to the next area, or when a reversal has created momentum and you haven't reached the next area. So what we're about to do right now, guys, your large chart with strength and room to trouble, we're going to pinpoint where those tails are most likely to form. We are not trading tails, because if that tail turns into a reversal bar, you just lost. We need that refinement chart to pinpoint where it's most likely to become a tail. That's where rule number 3 is going to get you, guys. Rule number 3 is designed to recognize the fight, to pinpoint where it's most likely to be lost, to give you the perfect predictable entry, and to reduce risk and maximize profit potential. And once again, I love language. There's a phrase, and if you learn this phrase, you're never going to miss your entry. And if you learn this phrase and you trust this phrase, you will literally call your shots and wait for the market to come to you. Takes a minute to learn it, but you'll get there. Learn the language first. You're going to use a limit order. And this limit order means that you get to wait for the market to come to you. You don't have to chase your trade. You're going to buy or sell a pullback. And now a pullback is, I'd have all the pictures. A pullback is that little fight counter to the underlying trend. It's that little fight that goes against everything that the large chart says. And you're going to buy or sell that pullback at an area, at a fib, at a midband, at a yellow 1-to-1. Why? Because areas are bouncy. And we want the market to bounce and continue with the large chart advantages. But here's the keys to the kingdom. That area will be inside of the large triggers on your small chart, because large triggers will show you exactly where the area needs to be. This entry phrase is a pattern. I'm going to use a limit order to buy or sell a pullback at an area inside of triggers. And you can see it visually. All of your trend trades will look like this. So let's go through the what. Do you need to, 10K, do you need to leave now? Can I get through entry rules and then we'll go to your charts? Cool. I'm going to get through the entry pattern, and before we start trading View 10K, I got you. And guys, please do this. If you need feedback in the room, but you have other commitments, let me know. Let me know. I'll make sure that you do get the feedback. I got you, 10K. So guys, when the large chart is up, let's go through the whys. When the large chart is up, when the large chart has strong triggers, when the large chart has a clear path, I can't stress enough how important it is to have the large chart lead the way. You're going to see the market somewhere right here. And if you're the swearing sort, you're going to do it. You're going to be like, man, I'm not making any money. They're going without me. This sucks. I hate Mark. I just want to go fishing. And then the reversal bar prints. This is the beginning of the pattern. And guys, these reversal bars happen all the time. And this reversal bar begins the pullback. It starts the fight. And you will know exactly where the fight is most likely, all caps, most likely, not guaranteed, to go. Once they start their fight, they are most likely to go somewhere from the top of those large triggers to the bottom of those large triggers. So we can say large triggers define the retracement zone. It defines where the market is most likely to pull back. But trigger lines aren't bouncy. Remember, we want bouncy things. It'll be the areas inside of that retracement zone, whether it is a mid-band, whether it is 1-to-1s, or even Fibonacci if it's in the retracement zone. This creates what I like to call the window of opportunity. And the window of opportunity is a very specific, easy to identify, accurate way to pick your entry. And sometimes there's multiples. That's what creates the window. Your job will be to activate a limit order just above the highest point of support. Because of the advantages on the large chart, guys, we know full well, without question, no hesitation, because we did our study, that the market may bounce from the highest point, but it's not guaranteed. The market may bounce from the lower point, but it's not guaranteed. The market may retrace all the way to the bottom. And guys, as long as you are in this range, rule number 3 is intact. As long as you are inside of those triggers, you still have the advantage of rule number 3. So don't get freaked out if there's a little overrun. But if that small crowd has it in them to blow through the retracement zone, to go screeching past the areas most likely to create a bounce, you'll be waiting for them with a stop. You'll say, oh my goodness, they ate their Wheaties, somebody got a loan from their uncle, and they blew through all of my good stuff and took away the edge that rule number 3 provides me. Guys, this will be a loser. And it's important that you understand. It is a loss, but that's a great trade that didn't win. Change your language. It makes losers much more palatable. Guys, anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. Trading is about probabilities. Trading is about doing the same thing, the exact pattern, the same rules, the same entries, so that you can say, if I take 20 of these trades, I'm likely to win 14 to 16 of them, and I'm likely to lose 4 to 6 of them. But in the broad spectrum, I should do all right with a little bit of management, guys. And that's all we're doing, is we're defining the patterns. We're talking about the whys. Because it's futures, we can do it both directions. When the large chart says down, when the large chart has momentum, and when the path is clear on the large chart, you will patiently wait for a reversal bar on the small chart. And let's be honest, guys, with a little bit of study, you'll know where your entry is coming from even before the reversal bar. Reversal bar signals the pullback. It's not the beginning. Hey, what's up, Mr. Jason? I see you doing nice things in the other room, man. Good to have you. Good to see that smiling face. Reversal bar starts the pullback, guys, is not the entry. Trigger lines, large. There's 2 sets on here. That's from both of your charts. Those will define the retracement zone, where the market is most likely to retrace. The area inside will define where the market is most likely to bounce. Boom, boom, boom. I got you. Give me 1 second, 452. Anything beyond the triggers, guys, is not used for an entry. Anything beyond the triggers is what we call where the market should not go. And where the market should not go is where your initial stop will be placed. And we would rather, me and the mouse in my pocket, we would rather take that small loser than hope that the market changes direction. Take that small loser instead of wishing the market would go down from beyond where my advantage is present, guys. And here's the cool thing, is the KISS plan tells you that if your stop doesn't get hit and you get a reversal bar in the direction of the trade, you'll reduce your risk about 2 ticks above that reversal bar. And it's not uncommon to see Nexgen users with maybe 3 or 4 ticks of risk. I think yesterday we watched Adam sell the high tick a couple times in a row because the methodology is so specific, guys. But you've got to learn it. You've got to trust it. It is nerve-wracking to sell a market when the perception is that it's going up. And it's nerve-wracking to buy a market when the perception is that it's going down. But that's why it's 2 charts. Because the large chart will define your trend. The large chart will show you that momentum, and the large chart will let you know that you at least have the potential to break whatever line's in your way, counting trigger lines. Now, when the large chart says go look for an entry, the large chart is literally trading all the way up here. And you're going to say to yourself, egads and little fishes, I don't have any room to make money. There's not much space to get to those 1-to-1s, but remember, those 1-to-1s are a target. Until price reaches them, they have no factor in your trading entry plan, just someplace you're hoping the market goes. That's when the reversal bar tends to happen on the small chart. And you're going to pinpoint an area inside of triggers for entry, and suddenly that little bit of profit potential grows exponentially. And because you're waiting for the pullback, your risk has been reduced dramatically. And guys, this is the pattern. This is the methodology. This is the same pattern that's been repeating itself for who knows how long. This one is from November 25. The exact same pattern, damn near to the tick, from 2021. The exact same pattern from 2022. And if you're focusing on learning the pattern, my friends, there's an awful lot. Let's grab a random one. You ready? What's it look like? Holy moly. Odds favorable momentum. Pull back to the area inside of triggers. And this one was actually labeled K's first trade. And there's the checklist right there. That's in the plan that I gave you guys. And this one was from when? 2023. There we go. Now 2023 has been represented. So take the time to learn the patterns. And as you learn to build trust in those patterns, guys, you can scroll back on a large chart. Let's see if we can find an example on a large chart, this is crude oil. I'm going to go to the S&P because the S&P tends to give us a little more. Let's find one of those examples where it was the potential to break and where the momentum was there, or maybe it was even a clear path. And you'll see these tails, and we're going to circle a couple of them because we're just learning to study the pattern. And we're going to see if any rules were met. And let's back it up a little bit. And I bet you that one was pretty awesome. Let's take a look here. Potential to break coming from that reversal spot. All right, so we've got a couple circles. Is everybody with me? I'm looking for momentum and at least the potential to break. This is how you're going to study and build a little trust. Now I'm going to scroll back on a smaller, faster chart. And there's a pullback directly to a midband inside of the retracement zone. And guys, that's a pretty kick-ass winner, I think. And there's a pullback to a midband right in the retracement zone. And if you didn't catch it, they came back for you. And that's a good potential. And then we back it up a little bit. 90% of your day is waiting, right? Look at the gap from 9:32 to 9:45. Longest 13 minutes of your life. Pulls directly back to the areas right inside of triggers and rockets north for the giant win. Guys, this is from this morning, and more specifically, this is from the last 20 minutes in the S&P. From the last 20 minutes in the S&P. And there's the momentum and the potential to break. And there it is in the retracement zone. And sure enough, it is bouncing up with momentum, and I'll be damned, there it goes. Pretty cool, right? Guys, if you're not impressed, it's because you're not studying it yet. But if you do a little bit of study, you'll be floored. Was that a high probability trend trade? No, it was only the potential to break. But the more you learn momentum, as soon as you can identify when it's only the potential or a clear path, you're going to find more. So let's see. Before we go to TradingView, guys, we're going to look at 10K's charts, and we're going to see if there's any truth in advertising. 10K is pretty solid typically. Let's take a look. Momentum not too strong on large chart, calling it B trade, but small triggers above the synth and green above the fib. I will call it termination clear, and I will disagree with you wholeheartedly, 10K. That 1-to-1 barely has two triggers above it. That is anything but a clear path, my friend. That is what we're going to call the potential to break. Does that make sense, 10K? It's only the potential. Cool. Does that make sense? Price reaches these yellow 1-to-1s, we're going to count triggers. If only two triggers are through, you can't call it anything other than the potential to break, which means you're going to have your management hat on. That's it. That's all it means. It doesn't mean there's not a trade for 10K. It means 10K knows, holy crap, I'm going to have to manage this bad boy. And then the market pulls back well below the triggers where the market shouldn't go. And you took an entry because I know you use reversal bars. You have a little different plan. And with the momentum, the market does in fact continue up. Now, is it high probability? Under no circumstances. At 58. I know you've got a plan for entry that doesn't fit the KISS plan. So this is how feedback is going to work for the rest of the day, guys. I'm not going to play the trade police and tell 10K, dang it, you broke rules. What I'm going to do is I'm going to take these three concepts that we just talked about, and I'll put them on the chart sometimes. And I'll say, 10K, you without question had smalls above the large, space between, you had momentum. And 10K is going to be like, oh, cool, I read that right. And then I'm going to read his annotations that said he had a clear path, and I'm going to say, 10K, do you recognize that with only two triggers above that area, it's the potential, and you may need to manage? And 10K is going to say, holy crap, I thought I had a clear path. I didn't know that. Now I know that I may need to manage this trade because I'm counting triggers. And then I'll say, 10K, you didn't have any areas inside of triggers. Well, you did, but you didn't. There were no areas inside of triggers. Right here there was. So your entries are from the wrong side of the triggers. Your entries are from where the market shouldn't go. And then 10K, do you use that confirmation bar for entry? Do you wait for an up bar for entry, or do you just jump in? Nope. So you just jump in from the wrong side of everything with two divergences and not a clear path. And then what I would say is 10K, what you have here is what I would consider to be a low probability trade. But 10K is going to say, well, Mark, I have my own plan. And I'm going to say, 10K, I know that you do, and that's totally cool. But for you guys that are studying the software as new users, I'm obligated to point out that that's not a clear path. And I have to say, once you get where the market shouldn't go, who knows if it's going to stop? And 10K can either accept it or not, right? 10K is using the Fibonacci area. And guys, every trigger was above the Fibonacci area, which means it was more likely to create a bounce up. There's more to 10K's plan than just arbitrarily jumping in. But I try to turn it into a lesson. I try to turn it into a lesson for the whole class. So we're looking for momentum, and we're looking for path. And I don't know, I'm assuming you got in right here. And we're looking for room to target. So guys, loss of momentum. The path is clear. There's an area right at the bottom of the triggers for entry. 2 out of 3, medium probability. Manage it if it goes wayward. 10K, nice trade. Triggers are down. Path is clear. There's his first pullback. Makes some money. Big stop out, right? Probably gave most of it back. Almost a B trade, not a strong bottom. I don't know if you went long somewhere. I see the short and profits, and then you turn around and go long. Direct, nope, that was a stop out. I don't see a long trade. Not a strong bottom. Triggers are up. Chose not to take the entry here. Made a little money with momentum and the potential to break. And now the perfect trade, right? Triggers are up. Nothing in the way. Pulls back to the area inside of triggers, and look how effortless that one looks. Look how effortless this one looks. Do you guys see it? In 10K, you know I'm not knocking you, right? But when the momentum is there, when the path is clear, when everything is freaking perfect, guys, that's what happens more often than it doesn't. And as a brand new user, you're going to see 10K doing weird shit, and you're going to wonder why you can't do it too. 10K can do that because 10K knows that this is his bread and butter, and the lessons from the high probability trend trade open the door for more trades. Nice trading, 10K. Nice trading. Current read. Momentum isn't great because the small triggers are up. Path isn't clear because price reached an area, right? And now we're waiting for the market to get in sync to give us an opportunity. Are there any questions about the high probability trend trade? Any questions about recognizing momentum? Any questions about counting triggers that lines to define it as a termination condition, keeping you out of trades directly into areas? Any questions about pullbacks to areas inside of triggers? Guys, I'm going to tell you right now, and I am a language nerd. I really am. I'm going to give you guys this. There are easy phrases that you can associate with the rules to be sure that they're true. Rule number 1, strong triggers, separation is strength. And if you don't see separation, you don't have strength. Rule number 1's not met. And rule number 2, if price reaches and none of the triggers are through, you don't have a clear path. Rule number 2 is not met. And then if you're not using a limit order to buy or sell a pullback at an area inside of triggers, rule number 3 is not in play. You don't have the perfect trade. And why do I do this? Because guys, I'm not telling you how to trade. I'm teaching you to recognize the good and bad things. I'm teaching you to recognize advantages that you can turn into trades because you're in control of the entry. I'm not. I don't tell you what to do. I refuse to tell you what to do or even give you advice. But when you know what's working for you and against you, it helps you make decisions not only on entering a trade, but how aggressively you may need to manage it. Are we only trading that break of levels? There is no we, noobs. You are on your own. I need a picture. Noobs, I need you to show me a picture. I am as artsy-fartsy as they come. And not only did I start picturing trigger lines in my head, there's 2 unicorns and a dragon duking it out below it. I'm not sure what you're talking about without a picture. Will you take a picture and ask the same question? Thanks, man. I'll hold on. I'll do other things until it gets there. And again, guys, see that yellow mark? 10K uses a reversal bar marker on a different time frame superimposed on his chart to take entries. For 99% of you in this room, that means jack squat, because I don't even know what entry bar it's from. I don't know what reversal bar it's from. I like it when you guys share your plans, and I know that you have a reason. And 10K, when I see an entry from you, I know that it's typically going to be from that yellow line. But guys, for those of you that are not using multiple time frames and different colors and different indicators, that's just high five 10K and say, good job following your plan. I love your plan, 10K. It's solid, right? I don't have a B trade. I don't teach a B trade. That's your B trade. And you've got a solid plan to take it. That's the point that I like to make, is that 10K knows exactly what he's going to do. He knows exactly where he's going to do it. He knows exactly how he's going to manage it, because 10K has put the time in to adjust a very basic plan to suit his needs based on his ability reading the indicators. Which is why, 10K, you are a shining example. You are a shining example of exactly what we're looking for, guys. In a different life, I was a personal trainer, and I used to tell my clients, I want you to fire me. I want you to get so good at this on your own independently that you no longer need me. That's my hope for you guys, that you focus on advantages and eventually you build your own plan rooted in those advantages. Good stuff. All right, let's go TradingView. All of my funding company people, this is for you. And guys, remember, today is Reset Free Friday. They decided to do it 2 weeks in a row. Guys, don't plan on it every Friday, I'm going to tell you right now. But today's the day where it's like you can test it without repercussion, pretty much. TradingView is very similar, but also very different, guys. TradingView only takes 3 rules. That's it. Takes 3 rules to define a trend trade. It only takes 2 charts to define a trend trade. I can't make it any easier than this. Some of you are like, well, I use price action. That's cool, right? 1 chart's great for you. I like more accuracy. You're going to have a 15-minute and a 1-minute. Big crowd, little crowd. Absolutely. Take care. Nope, it is Mark Novak at Next. Here you go, 10K. Let me get it for you. Mark Novak at NexGenT3.com. That'll get me. In setups where the price reaches the trigger zone but momentum is absent or diverging, what's the common no trigger clue you see that makes you immediately skip the trade? Good question. Let me see what the attachment was that you were referencing. Cool. So for me, Jason, hey, good morning, Cav. And it almost sounds, this is really going to sound like probably smart-assish, and please know that it's not. So what you're asking is, Mark, if your rules aren't met, what clues do you have to not take the trade? Well, Mr. Jason, my clue is that my rules aren't met. And I know that sounds like Sunday school answer, right? What's the answer, kids? Jesus. If my large chart doesn't have strong triggers, I don't take the trade. And if I can't couple strong triggers with a clear path, I don't take the trade. And if that market doesn't pull back to an area inside of triggers as a brand new user following the KISS plan, I simply don't take the trade. Does that make sense, Mr. Jason? And then here's the ray of shining light at the end of that tunnel, is that when I get good at these 3 concepts and I'm finding consistency and success with a plan that's been proven to win more than it loses, Mr. Jason, you begin to say things like, well, I don't have the best momentum, but I do have a clear path and I can define that entry area down damn near to the tick. I'm willing to take and manage this trade and manage it a little more assertively because it falls into a medium probability scenario. And then the same is true. You may notice that 2 out of 3 are gone and say, I'm cool with a low probability trade. I'm up 10 grand or whatever. So it's not so much every scenario that is possible. What I teach in this room is learn these three things. And you can begin to say, and hopefully maybe even out loud, you might say, 33% of my advantages are gone. I'm still willing to take this trade and manage it assertively. And then you may say something clever like 66% of my advantages are gone. Why would I ever take what I know to be a low probability trade? Does that make sense? So price may reach, but if the momentum is absent, let's go see if we can find an example of it, because that's fun for me. Let's go see if we can find an example of what's the ES doing today? I want to find a good one. Here we go. What was that? 934. Let me put a circle on this real quick, Jason. That's some sort of discipline. And Jason, that's the hard part. That's the hard part. If you don't believe that your setup wins more than it loses, that discipline is very, very difficult. But Mr. Jason, so check it out. And here's a great example. And I know that you're brand new in my room, but I think this is important, not only for you, for everybody. If we always go back to the three things, if I look at my chart and I say, oh crap, I don't have momentum because there is no separation between the small and large, my brain instantly says, Mark, you're losing one of your advantages. And what does it mean when you lose momentum? It means anything could happen up or down. The market could push up, but the market could also do that. I don't know what's going to happen, but I know that it doesn't have the driving force behind it to make me feel comfortable that the odds are favorable it will continue up. Does that make sense? So from one advantage, I've got a really good synopsis of what the market's likely to do. And then I have to say, well, I don't have the best momentum, right? Going back to those core concepts, and all four trigger lines aren't above. They're not above that area of resistance, which means, damn it, I don't have momentum or a clear path. And Mr. Jason, without the threat of making or losing money, before I ever even look at a small chart, I can say, dag nabbit, carn sarn it, I'm missing 66% of the good things that create the perfect trade. And here's where the siren song gets you. Mr. Jason, that's the perfect looking entry. That is a beautiful pullback right to an area inside of triggers. My entry area is clearly defined. But without the momentum to push it up, without the clear path, it's Loserville, population me. Does that make sense? That's a good visual of how, if you really focus on the advantages, if you really lean on the idea that there is a perfect trade, when the perfect things start to disappear and you trust that this is the perfect trade, you're less likely to take chances because you know the next one's coming. Does that make sense, Mr. Jason? I love that. That's a great question. It's keep them coming, man. I like it. But let's talk trading view real quick. 3 rules, 2 charts, guys. Big chart, little chart. 15 minute, 1 minute. 15 minutes, super slow. Hard to see change. You're welcome. Thank you for that. You will define direction, momentum, targets, and terminations, guys. The large crowd does the work for you. The small chart will define the immediate strength of the market using those small triggers, pushing down, and it'll also define right where that fight is most likely to be lost. Guys, it's no different. There's a trend. There's a fight. There's continuation. That's what we're looking for. Large chart only has small triggers. Oh my gosh, AW. Did he leave? No. Someone asked about the workspaces. 452, are you still in here? Oh, dude, I totally brain farted on you. Guys, I do that sometimes. I do that sometimes. If you ever need the workspaces for TradingView, here we go. I mean, this is timely. We're talking about TradingView. Let me give you the link to it real quick. Did they change it? Oh, damn it. How to access the workspace in TradingView. Trade checklist. I think they changed it on me. Let me send an angry email real quick. All right. I'm going to get an answer on that, but here, let me give my workspace to you guys just so you have it. Let's share it. Let me copy the link. And I'm just going to send 452 a private message. Oh, guys, don't let me get away with not giving you what you ask for, please. It's never intentional. That's my workspace. Guys, your large chart over here has no large triggers. Your large chart in TradingView has no background colors. It is such a slow chart. Those are just distractions, guys. Those are opinion formers. You'll see small triggers, and they're either up or down. Cyan is up, white is down. On your small chart, you're going to see small and large triggers. The bigger of the two are the big triggers. How clever is that? And they're either going up or down again. And you'll use the same concept that separation is strength for the second trade on the plan that I gave you. But if I'm being completely honest with you, the small triggers are enough to execute the trend trade. They really are, because your entry rules are very specific in relation to them. Both charts will have areas. Areas are bouncy. Have I mentioned that? Areas are bouncy. Areas can create ricochets. They all have names. They're the same. They're the T3 indicators. But I've given you the PowerPoint. They tell you how they can be used. Targets, terminations, or entries. Some of them are just targets and terminations. But areas can create a bounce. So 3 rules. Did you guys know that I had someone call me once? And they didn't yell at me, but they're like, Mark, there is no way 3 rules is enough to find success. And I love that, because that's what we've all been brainwashed to think. You need all of my stuff and all of my time frames and all of my chart analysis and send me $10 million and you'll be rich. Bullshit. 3 rules, guys. It's just a trend trade. People have been taking these for 100 years. That's made up number. Define the trend. Your first 2 rules literally say don't trade into anything. And then the 3rd rule defines the pullback, guys. It shows you exactly where the market's most likely to bounce. Trend is defined with the small triggers on the large chart. They're either up or down. And here's the thing, guys. If you can't tell if they're up or down, if the people that move the market can't figure out what the hell they want to do, why are you going to guess? Let a trend be established. Let it be up. Let them pinch. Let them roll. Let them open, right? That's your path of least resistance. If I look at a chart and I say, I can't tell if those are going up or down, how am I going to take a trend trade? How are you going to take a trend trade? So direction is either up or down. On your large chart, rule number 1 on the 15-minute chart is when you take an entry, your entry is not trading directly into an area. Whether it is an outer band, a mid band, a 1-to-1, a divergence high, a divergence low. Guys, areas are bouncy. We want room to make money. And on your small chart, from wherever you take that amazing entry, you have to have room to trouble. Because if you go long directly into an area of resistance saying something clever like, oh, it should break, they're probably going to whip your ass. And if you go short into an area of support, saying something like, oh, it has to break, they're probably going to put you in your place more often than not. So rule number 1 and 2 are the same darn rule. Make sure you have room to make money. And then just go pinpoint where the fight's likely to be lost. This is a long trend trade entry, which means that my large chart has already established an uptrend, that my large chart has room to trouble. And guys, the pullback begins when the small triggers roll down, not a reversal bar, because you'll get reversal bars all the way up. No big deal. It's the small triggers rolling down. That's what signals the beginning of the fight. And when those triggers roll, you might do something clever, like say, there's an area for it to pull back to. There's an area, there's an area, there's an area. I don't have any idea which one it's going to be. So the rules give you some very precise entry criteria. When the market reaches an area, you will enter your long trade with, wrong way, a reversal bar in the direction of your trade, an up bar, but here's the most important part. Both corners of that bar have to finish above the small triggers because this is the weak side of the triggers. And as long as I am left of these triggers, that market's probably going down. This is the immediate strength. Once I get to the good side, that's where the small chart is most likely to reverse and continue in the direction of my large chart advantages. Guys, the trend trade entry is very specific. First, the small triggers roll, then there's a pullback, then there's a close on the correct side of the triggers. And it's going to look the same every time. It's a pattern. That's all it is. First, it's direction. The small triggers are up. Then it's room to trouble. Nothing in the way to create a bounce. So I go to my small chart. My small triggers roll, and the market pulls back to the area. And I put a box around it. I called my shot. It took it 8 minutes to get there, but I knew exactly where it had to go. And then I waited for a close on the correct side of the triggers, and now the small chart has reversed in the direction of the large chart advantages. And sure enough, Zingsville, right up to the profit targets. Going the other direction. First, it's triggers down. Once the triggers are down, I make sure that I have room to trouble. Small triggers roll, pulls back to the area, reversal bar, close below. And Pablo, can I use yours as an example? Rule number 2. 27, well, this is really both of these. No room on the large chart, and still into support on the small chart, guys. Rules 1 and 2 broken. Pablo, I'm sorry, that's tough. You probably sat super patient all morning, and then you got tired of waiting. But this is still an area of support. There is no room on the large chart. And man, support worked. Support worked. And it just whipped your butt, and it did quick. And I'm sorry that that happened to you. Now, up here where you got stopped out, that was a momentum entry with room to trouble. With strong triggers and everything down. That would have been your momentum entry, and that was a big winner. Oh, you went long. Ah, what direction are your triggers going? They're flat, right? They're not going up or down. Who the hell knows? Exactly. And then Pablo, do you see all of that strength? All of that strength against you? And then I can say it here too, 62, you had nowhere to go. And it just whipped you, buddy. I'm sorry. So that goes back to triggers tough to identify, should have stayed out. But man, and I'm going to say it right now, guys. If you don't take trades like this every now and then, you're not going to learn how to avoid them, right? If you don't have that little mental lapse every now and then. So what Pablo's going to do, because Pablo's freaking brilliant, handsome to boot, is Pablo's going to come back and he's going to put this in his chart or in his spreadsheet, and he's going to say, hey, I'm going to really make sure that I can tell which direction those triggers are going next time, because this doesn't seem to be working out for me. So Pablo, You are an absolute rock star for posting that in the room and for having the courage to post a loser to get the feedback to move forward. And guys, that's what we're going to do. And we'll do one quick lesson on termination conditions. Can we talk about a mid-band termination? Absolutely. It's just one phrase. It's just one phrase. If price reaches the mid-band and the large triggers are a full bar away, the mid-band is a termination condition. Does that make sense? If price reaches a mid-band, even if it goes beyond it, if it hits the mid-band and the large triggers are a full bar away, it's a termination condition. So Adam, were your large triggers a full bar away? They weren't. The mid-band isn't behaving as a termination condition. Now let's take it to an even bigger lesson, Adam. Not a good top. Not at all a good top. Because, hell, 3 out of 4 trigger lines got through it. That's not a good top. That's a weak top. And from a weak top, that mid-band can create a bounce. And while your entry at 92, 82 fits the bill, with those split triggers, Adam, you said, I'll take it. I'll put my stop there above the pivot, right? But it can still go up all the way to here, and they do get you. And a lot of it has to do with the idea that that mid-band is more likely to create an ugly bounce when it's not a strong top. So it's rooted at the beginning. Weak top, more likely to continue up from the mid-band. Does that make sense? And there's going to be a point where you're like, I just don't want that much risk on a trade, right? I love a reversal bar, Adam. It's a good look. I love a reversal bar. This is one of those times where a little confirmation might save you 7, 8, 9 ticks of risk. All right, and you are asking strength, triggers reversed, everything's cranking, room to targets, right? And they didn't give you the entry, did they, Nubiz? Those mother sons of goats. So, Nubiz, this is what we call getting married to a trade. And let me show you why. And I love this look because I am so freaking guilty of it. Give me a short. Give me a short. Where's my short? Why won't they retrace? I need a short. Where the hell is my short? I need my short. My rules are met. This is beautiful. And Nubiz, you called it like a champ, right? Like a champ. But you never got an entry rule. And Boaz pointed it out. Nexgen does teach a momentum trade that looks exactly like that, but you're not there yet. You'll get that one eventually. But Nubiz, after all of these shenanigans where they straight line, you are so intent on catching that short trade that you had weak triggers, right? You had a termination condition and you had no area inside of triggers. So Nubiz, this is what we call getting married to the trade. Because where you really wanted to take it, it was perfect. You had momentum, clear path, and entry. But where you finally got your pullback, you had absolutely none of them. Does that make sense? So you got to be in the moment. And Nubiz, you've got to believe that every move isn't yours. And what we call this isn't necessarily the fear of missing out, but rather the fear of being left out. But this is the fear of being left out. Everybody's making money but Nubiz. F them. I'll teach them. I'll jump in and hope that they keep going down. And we're all guilty of it. You're just brave enough to post it in the room and get a little bit of feedback. But what I really want to see, Nubiz, and what I really want to hear is that you see when you finally took the trade, absolutely none of your rules were met, right? And you were probably so ticked off about it at 932. Hold on, watch this. Let's go look at the S&P real quick at 932. You were probably so pissed off about it that you didn't even consider the long trade. You were stewing over that loss that you didn't even notice that they apologized the other way. From the termination, with momentum, the potential to break, right? That's normal. That's normal. Of course you didn't, because you were still mad about the idea that you lost the short you thought you should have won. Momentum and path, pull back to the area inside of triggers. Is anyone going to show me their awesome trade right here that fit the rules 100%? That made it to the target? Did anybody take that? First it's momentum, separation. Then it's clear path. Then it's a pullback to the area inside of triggers. And there's your continuation. Moonwalk, do you see it? Guys, this is your pattern. There is so much noise in a market when you're trying to find the money. There's so much distraction when you're worried about getting paid. But if all you're focused on is 3 kick-ass things, it is not, Aaron. Do you know why it's not? Let's use the phrase. When is the mid-band a termination condition? If the large triggers are a full bar away. I want you guys to learn that phrase. The mid-band is a termination condition only if the large triggers are a full bar away. So let's find it. Boom. There's the mid-band. I could create an entire bar before it touched the large triggers. Aaron, that is textbook when the mid-band is a termination condition. And then I did this lesson with somebody yesterday. So check it out. All right. Price reaches the mid-band. Those large triggers are probably a full bar away. The mid-band is in fact a termination condition. But as price moves down and the triggers move down, the triggers close the gap. They're no longer a full bar away. The mid-band is no longer on my radar as a termination condition because I didn't have room for a full bar to get me back. Does that make sense, Aaron? So learn that phrase. The mid-band is a termination condition if the large triggers are a full bar away. Otherwise, it's just a squiggly line on your screen. Good stuff. Nobody took that one? I don't have any S&P traders in here. Oh, guys, that's the one that gets you on the golf course early. So, Aaron, ask yourself, why did you miss it? You don't have to answer in the room. Why did I miss this trade? Was it because I wasn't there, which is a great answer. You can't take a trade if you're not in front of your computer. Or did you talk yourself out of the trade? Because maybe you saw a divergence. Did you talk yourself out of the trade because you just didn't do the calculations fast enough? And only you can answer that question. But guys, when you go back and you see the perfect setup, you have to ask yourself, how did I talk myself out of it? What did I not see? What did I not understand? And more importantly, post it in the room and say, Mark, I didn't take this trade because. And then we'll have a great discussion. But before we do that, I'm going to go talk to a man about a thing. I'll be back in like 3 minutes, guys, and we'll start cranking it out. Well, Nubes, show me your chart. Hold on, you put a picture up here. Let me see if I see something instantly. Is your computer Eastern time frame? It is, right? You're an Eastern time frame. Let me think of things that can adjust it. All right, so Aaron. Oh, can I address this? Nubes, one thing you can do is right click and refresh data. You've got a 70 fib on your small chart here that isn't showing up on your large chart. So maybe you can, you got all sorts of stuff going on here. So I would do this, and then Aaron, I'm going to address that. Right click on your chart, Nubis, and just for grins, reload all historical data and see if that changes anything. And then if you're concerned, here, I'll do it too. We'll see what mine does. Maybe mine will show up and match yours, because I do so many changes for education on mine. But Aaron said, well, I saw the previous run up from the mid band, and I wasn't sure if the mid band would continue to be a term, so I watched it happen. So Aaron, two things that I really want to address here. First, you've got to learn the language for when a mid band is a term, right? Because that would have at least eased your mind. The large triggers aren't a full bar away. I feel pretty good about it. And the second thing, guys, is when you look back, right, and you form an opinion. Yeah, mine looks like it may be staying the same. Well, the mid band held there, so I'm scared of it the next time. The mid band held here because I'm scared of it the next time. You've got to be in the moment. What's happening right now? Are my rules met right now? Do I have momentum right now? Do I have a clear path right now? Do I have an area inside of triggers right now? Guys, don't worry about what's happened before. You can't change the past. You can't do it. And if you flinch every time the market makes a move because you've been hurt before, you're going to miss great trades. And as you develop the trust, right? As you develop the trust, you will take losers. As you develop the trust, you will make mistakes. But if you think you see a trade, take it. And then when you take it, this is the most omitted part. When you take the trade and you annotate the chart, write your rules. Smalls below large, space, strong, odds favorable, momentum. Rule 1 met. And then do number 2. I'll talk about it in just 1 second, Moonwalk. Price did not reach the next line. All triggers below the previous line. Clear path. And then the magic phrase. Pull back to an area inside of triggers. So guys, does it fit the plan? It does, right? Do you guys see it? Does it fitting the plan here have anything to do with that tick? Or anything to do with that divergence? Or anything to do with that trigger line? Or the color of the background over here? Or that red line up there? It really doesn't. Checked on, Nubis. Checked on. So be in the moment. Be in the moment. So Moonwalk, and I like this because we all feel that way. Moonwalk said, how the hell are you guys trading a market that moves this fast? What market are you looking at, Moonwalk? Let's start there. Please tell me you're not looking at the NASDAQ. Because the NASDAQ is nuts. Are you watching the S&P or crude oil? You're watching the NASDAQ? Okay. So let's fix that. Let's fix that, Moonwalk. The NASDAQ, I don't know if you have kids, but there was a movie called Over the Hedge back maybe in the 90s. You're probably not old enough to remember that. Or you might have been the kid that watched it. And Over the Hedge, there's a good picture. Whoops. Over the Hedge had this squirrel. And the squirrel was named Hammy. And Hammy was so HD, no, I guarantee you're not, was so like HD ADD, crazy that he'd have to drink a Red Bull to slow down. That's the NASDAQ. So the NASDAQ is such a big, fast market that we even had to increase the time frames to try to slow it down. And Moonwalk, it's a kiss of death for a new user. It's just too fast. So while I don't give trading advice, I would encourage you to learn these patterns on the S&P, to learn these patterns. Yeah, Nubis, just put a link in with Jason. Let him look at it and get you squared away. Until you really know what you're looking for, the NASDAQ is freaking crazy. Yeah, S&P is so much easier. And like this is the S&P. And if I pee my pants, this is on you guys because I gotta go. And I'm gonna bring up the NASDAQ real quick. Holy pictures, Batman. I just want you to see. So the NASDAQ, the large crowd, the large chart is 3 times bigger than it is on the S&P. And the small chart on the NASDAQ Moonwalk is actually the large chart from every other market. That's how fast the S&P is, and you'll see it in just a second. I love the S&P. I trade the S&P, but I've also got 6 years of reading indicators, and I know my entries. Sergio, I watched gold the other night, and it was like FOMC day. It was the fastest I've ever seen a market move without a news release. Pretty good on TradingView when everything is a minute bar, and this is almost there. But yeah, Moonwalk, we'll make it way easier for you. We'll slow it way down. It's so much slower. So watch the NASDAQ for a second. Look at that. That's ridiculous. That's untradeable. I can't even trade that Moonwalk. That's crazy. So good. I'm glad you said something. Oh, I could teach it. Look at that. Price reaches support. Large triggers are a full bar away. Absolutely no short. Sometimes you could say with a close on the right side of the triggers, you could just go up and close that gap, make a little money. When you reach the next area, close out. Guys, I can trade it, but I know what I'm looking for. That was pretty kick-ass, wasn't it? Quick grand. Guys, that is where you're all headed. But if you're brand new, you're not going to be able to trade that market. It's okay, guys. Be impressed. That's where I drop the mic and feel like a pretty big deal. Thanks. But Nubis, did you see how I didn't just jump in? What I said was that price reached Fibonacci support. The large triggers are a full bar away. And with a close on the correct side of the small triggers, I could break down that gap to the large triggers because of the gap theory. I didn't just jump in. I had a 100% solid, predetermined, planned out approach of attack because I know my plan like the back of my hand. And look where I got paid on the final contract. Right at the Fibonacci resistance that could have stopped the market. Guys, you can do this, but you probably can't do it on day one. And you probably can't do it on the NASDAQ. Not yet, but you're going to get there. But I think what that shows is that when you do know your plan, execution is fast. And chart reads are fast. And confidence is high because you know you have an edge. That was about the perfect example. All right, guys. I'm going to be back in just a minute. I'm going to go through all the pictures that are posted. We're going to talk about them. We're going to talk about the good, the bad. We're going to give corrective action if you made a mistake. We're going to answer every question that you have. All you have to do is post it in the room. So do me a favor, go stretch your legs for a second. And I'm going to do the same. I'll see you in 3 or 4 minutes. And the guys, we'll just rock it out until we're done rocking it out, right? So keep them coming. See you in a few. All right, guys, we're going to get back to work. Are we comparing ages now? All right, Miss Moonwalk. So the ATM, here we go. I'll drop mine in there. I'm 53. But I am a high mileage 53. I got more screws in me than I have screws loose. I'm a baby. All right. So ATM strategy, Moonwalk. I've gotten rid of most of mine because I hate clutter. A little bit of OCD maybe. So if you want to focus on the KISS plan, and guys, this is for everybody. If you want to set up an ATM strategy that is for the KISS plan on the S&P, let's do that. You guys want to do it together? Yay! All right, awesome. So let's do it together. I want you to go to your drop-down menu. Are you with me, Moonwalk? We're going to build you an ATM strategy that fits the KISS plan, 100%. It'll put your stops and targets and all that good stuff. So I want you to go to Custom. So from the drop-down right here, under ATM strategy, go to Custom. And it's going to bring up this bad boy. So the KISS plan management plan says, let's trade 2 contracts. And because I like to give the whys, we're going to trade 2 contracts because the management plan is going to help you understand stop placement, but it's also going to get you paid. It's going to focus on getting money in the bank and not hoping for a home run every time you step up to the plate. So order quantity is 2. And since we're going to have 2 different targets right here, you have to click add. And that's going to give you target 1 and target 2. And it's going to be quantity 1 on each of those. Let me know when you're caught up if you're doing this, everybody. And then I'll go to the next step. We're good to go? Cool. Sergio, this is not for NASDAQ. So stop loss. Stop loss is not an arbitrary number, guys. Stop loss is going to be 4 to 5 ticks beyond the trigger lines, but every trade is different. I don't know where that's going to be. Oh, no worries. It went to 5. So just go to order quantity and drop it down to 2. Got it? Cool. 2 targets, 1 contract each. And now going back to the idea that stops are placed where the market shouldn't go, we can't predict that for every trade. It's going to vary for every trade. So what we're going to do is we're going to give ourselves a number on the stop loss. It's in ticks. That gives us time to react and put the market or put the stop in the correct spot. For the S&P for crude oil, 12 ticks tends to be a big enough number to give you reaction time. Now it might be 8 ticks where the market shouldn't go, and it might be 17 ticks, but 12 gives you the reaction time. And now profits are taken in the KISS plan at $100 and $200. So for the S&P, profit number 1 is only 8 ticks, 8 little clicks, smallest increments to get you to your first profit target. And then since 200 is twice that, your second profit target is 16. So when you put your settings in, they should look exactly like this. There's your picture. And now what you're going to do is you're going to save it as a template. And call it anything you want. Call it Moonwalk's Moneymaker, Sergio's Big Baller, whatever. I'm going to call mine KISS ES because I'm not very creative. And then I'm going to hit save. And I'm going to click yes. And click OK. And now every time I enter the market with the KISS ES, it's going to put my stop at 12 ticks. And I'll adjust it to where the market shouldn't go. And it's going to put my targets at 100 and 200 so that I can stay consistent with that methodology, so I can stay consistent with the plan until I get the reps under to start making better decisions and different management plans on my own. You guys good? Do I know how to move it? Of course I do, Sergio. So check it out. Oh, to follow, you have to build your own to make that happen. Hold on. I always tell you guys, I won't keep anything from you. Let me go to templates, ATM strategy. Here's the one I built, Sergio. Actually, hold on. That one might have been an old one. Here's one that I built. Compressed to zip file. So I'll share it with you. In the way this one works, Sergio, and you'll have to extract it. You'll have to take that zip file and extract it to Documents, NinjaTrader 8, Templates, ATM Strategy. But it's a 4-lot. It's a 4-lot. And it is, edit. It's profits at 25, 150. Profits at 40 on the third, and then the fourth contract runs, Sergio. The fourth contract will chase it until it's stopped out. So you may have to adjust settings to work for you. All right, let's get up to the top here and start looking at the pictures that you guys posted. See if we can't find some lessons in there. Whoops, that was yesterday. All right, here we go. Bonk, 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 bonk. Bonk is a technical term that says, hey, I've clicked on the link you presented. Oh, don't miss this one. Hold on. Don't miss this one. Oh, the puppy's so cute. That's a good dog. And guys, you are always cordially invited to post pictures of your dog. I never get tired of looking at them. All right, Paul, Pete. Sorry guys, it takes me a second. You guys flood the room all morning long, so when we do get to chart reading, what I do is I start, just start at the top and click all of the links so that, Pablo, we already talked about yours. We talked about that one. We talked about that one. So I don't miss any. If I ever miss one of your pictures, guys, if I ever miss a question, if I ever miss a comment, just let me know. It's never intentional. Good, Moonwalk. That makes me happy. That makes me happy. I'm telling you guys, I'm kind of smart, but I'm not that smart. So I try to really keep things as simple as I possibly can. Let's see, 15 minutes in a zone. So rule number 1 broken. Waiting. Got to remember to check with the large chart first. There's your entry. Didn't quite make the mid band, but it's close. You get in. There's just nowhere to go. And you jump ship for 70 bucks and said, man, I'm going to get out. I made a mistake. I'm not going to take a huge loss. And guys, that's hard to do. Great job, Paul. And then sure enough, then it comes back and then it heads up and there's just nowhere to go, right? So if you make a mistake, guys, it's okay to exit. It's hard because it means that what if, right? There's that little what if monster. I know I'm not in the right trade, but what if it goes? I know I'm not in the right trade, but what if it doesn't lose? And you'll hold on and smoke the hopium, guys. Momentum and path. Everything is up. There's nothing in the way, and Cab just jumps the fudge in and jumps the fudge right out. And that's what happens when you start to learn momentum and path. Termination condition, I can't go long anymore. Divergence from the termination condition, that's a pretty good sign that I can't go long anymore. And Cab just says, you know what? I'm going to jump the fudge in as the market's coming up with everything pointing up, and it works out. And guys, that's what we call testicular fortitude on simulator. When every indicator on your chart is pointing up, when you're on the wrong side of the small triggers, when it's been a strong trending market for the last hour and a half, and you decide to go short and make a little money, guys, this is the kind of trading, and Cav, I know that you know this, and I'm not beating you up. This is the kind of trading that drains your account when you go live. Because on Sim, I have a chair next to my chair for my balls, because I don't care if I lose on Sim. Just, I gotta point it out. If you fight everything and win, you probably got lucky. But if everything is going your direction and you go up with it, you probably read your indicators. Good job, Pete. And if everything is up with momentum, jump the fudge in and get out of trouble, right? Guys, I don't teach that. That's not a next-gen trade. That was a trade that was developed by a next-gen user that recognized that when the market has momentum and absolutely nothing in the way, it seems to be really hard to stop. And they just jump the fudge in. And the question is, why the hell didn't you take the perfect trend trade and make more money? Because sometimes you'll get so focused on doing the I'm going to pull one over on the market trades that you forget to take the best of the best trade. Nice trading, Pete. Everything is up, 4 triggers through, room to trouble, jump the fudge in and get the fudge out because it's just jumping in. Is this you, Jen? And then with the strong trending market and nothing in the way, guys, there's this idea that you can just keep buying the mid-band until it doesn't work. But Jen says, I'm already where the market shouldn't go. Let me wait for a little confirmation so I have some place to put my stop, and I'll get paid. And until I hit something solid, I will repeat this process until it doesn't win anymore. And you guys, do you want a little heads up on which one won't win? You guys want me to share that secret with you? So the one that won't win will be the last one that you take. Just so that there's clarity. Sorry, guys, that's me. When it stops working, stop doing it. But until that happens, have fun. Smalls above. 3 triggers through. No areas inside of triggers, and it just smashed through. And even more so, potential to break, Jen. 2 divergences against the potential to break. And then you even have that bad boy over here. Kiss of death. Great chart read. Beautiful chart read, great patience. So Nubis, there's 2 ways to look at it. If you're a brand new user, why think that much? But yes, if you have 30 plus bars in the same direction, if you have that look right there, that railroad track, smalls riding the large, that is a strong trending market. You can call that strong triggers. That's kind of the second look. But it has to have that smalls riding the large, looks like a train track. That's a strong trending market look. Pete, we've talked about 2 or 3 of yours, and I started yesterday afternoon. Did I really miss them? Will you repost them for me if you need feedback? I'm sorry, dude. I didn't do it intentional. Thank you for that. That's just, it's easier than me chasing, because if I miss them the first time, I don't know where they are. 4 triggers through. Room to trouble. No areas inside of triggers, so waited for reversal bar so that I'd have a place to put my stop. Great job. So guys, this is pretty cool. Remember when I said when you talk about what's good and bad, you'll be able to make decisions? So Jen said, check it out. I've got momentum. That's a market that's going to be hard to stop. I've got a clear path. There's nothing in the way to stop it. It's like right here. And then she says, dag nabbit, carn sarnet, or Australian, crikey, right? Because that's what they say. I can't define an entry area. My only area is where the market shouldn't go. How do I place a stop? Well, if I wait for a down bar, I'll put my stop behind that. Crikey, mate. And we all say howdy and ma'am here in Texas. But I'm not in Texas, I'm in Georgia. So I guess I say I do to Clea. But guys, that's where when you know what's good and bad, you can make some decisions, right? You can say, man, I'm really good at this. I know that's going to be hard to stop. There's nothing to stop it. I'll just wait for a little confirmation so I have some place to hide my stop. That's where you're all headed. You're going to hear me saying that a lot. That's where you're all headed. With a little bit of study, that's where you're headed. With a little bit of practice, that's where you're headed. Market reverses from nowhere. And Jen, I see you parroting somebody else's annotations here. Market reverses, triggers roll. It's a weak bottom. Only 2 triggers above support. That's a crappy look from a weak bottom. Waited for 3 triggers through on the large chart, which would have been all the way over here. And you jump in, hoping it goes to the fib, and it does. And now here's the question, even BFF, my gosh. Half off 10 ticks, balance trailing stop. Cool, you had room to make money. That's a Pete trade. That's a Pete annotation. If I didn't know that was Jen's post, I would have thought it was you, Pete. Downtrending market, 34 bars, broke the fib, the BFF, jump the fudge in, get paid before trouble. That's it. 4 triggers below, everything is down, find a way. Momentum and path. Oh, it's a cute puppy. Sorry. All right, triggers are up. Tons of room. Pull back to the area, close above. Not a lot of room, so quick profits on the first one. I don't even know that 2 ticks is worth it, to be honest with you. It might be, Jen. Is 2 ticks to trouble? You cool with that? And then it does go from the strong side. Nice job. Whoops, that was a question. Okay. 15 minutes up, transition, room to trouble, pulls back to the area. There's the first close above. Pulls back to the area again. Just pretty tight, but it does make it, doesn't it? Paul, it does everything it said it was going to do. It made it right to trouble. But it was tight, and the risk was huge, but they never went where the market shouldn't. And they do make it. But guys, if you have 78, if you have $900 per contract worth of risk, and you've got all of $40 worth of profit potential, you're not going to make sane decisions about your management, right? Sometimes, like Paul said, just probably better not to be in that trade, because the emotional strain of that much risk with nowhere to go is going to eat you to pieces. It was not a sane moment. I have those all the time. Strong top, another strong top, everything's down. There's the pullback to the mid band, didn't catch that one, comes down, jump the fudge in, momentum trade without really having momentum, pulls back, turns into a trend trade, and out you go. Nice trade. That's a Pete trade. 15-minute down, indecision, right, Paul? We saw this one earlier. Pulls back, goes short, makes total sense. No real room to the mid band. Rule number 2 not met. But this is one of those times, and what do you call it? The gate. I like it. It's the gate. So they were down, right? When you took the trade, they were down. They hadn't gone up yet. Everything makes sense. The only thing is that there wasn't much room to the mid band, and then they just came up. And even the ones that follow the rules are going to lose every now and then, guys. And Paul, it follows the rules. We're going to take losers from time to time. And the only coaching I could give on this is if they can't tell, how do you? Right? If they're not sure which way they want to go, maybe it's better to let them figure it out and then just latch onto them, right? Do that remora thing. Everything is down. Strong side, clear path. However, mid-band and VWAP are preventing my quick path. So is it a clear path? I'm not sure where you entered. There's your pullback. There was your close below. So from 805 to 95, you had about 10 points. And it didn't work. And 37 is a big ambitious stop. Probably above that one. But that was your next pivot, right? And then that down bar was probably your next. And just, it's tight, but it makes sense. Hold on, 30. Where's 30? 30's up here. 30. VWAP was at 26. 26. It makes sense, Paul. I think it had already been where it was going. But it makes sense. I don't know. I mean, you had 10 points to get to trouble. You had triggers down. You were on the strong side. Everything was aiming down. You're bouncing from resistance. There's so much right with this trade, Paul. It just didn't work. I had a buddy that used to tell me, some days you're the boot and some days you're the butt. And man, you've had two where you were the butt. And that happens. That's just a part of trading. Which means that you're due to be the boot, right? A boot for my Canadian friends. Thought this was a good 50-50. That's what I get for thinking. Well, let's look at it. Strong top. Odds favorable. Two triggers through. Amen, Pete. So Pete, two triggers through, not the best look, but it is a look. You had strong triggers. You had no divergence. You had a clearly defined entry. And you had a reasonable stop. It didn't work. Pete, you followed every rule. I mean, except three triggers through. But, dude, it's perfect. It just didn't work. I would probably lose that trade with you. And we would just high five at the bar later. Man, remember when we got our asses kicked on the perfect trade? Happens sometimes, guys. I like that you guys are posting these. Uh-oh. Who was that? Good job. Hell yeah. Who passed their evaluation today? You bad mother scratcher. Good job, Wayne. I had a feeling you would. Nicely done, man. All right, the trend is up. Weak side of the triggers, room to target. Strong triggers. Break above resistance, turning it into support. Pulls back to that area of support. Wayne says, that's a momentum trade. Let's go make some money. And you did. Wayne, beautiful execution. Nicely done. Can't find anything wrong with that. Triggers are up. Room to trouble. Pulls all the way back to the area. Almost closes above the triggers. 55. And that's a lot more room. That's pretty deceiving, right? When you look at that chart, you're like, he didn't have anywhere to run. Guys, he had $500 worth of profit to get there. Wayne, great trade, dude. Great trade. It's the perfect trend trade. Now, let me go broken record for a second. It's the perfect rules-based momentum trade. It's the perfect rules-based trend trade. That's it. That's all I'm going to say. And then we talked about this one, right? Wrong side of the triggers. No momentum. Termination. All right, let's see what Phil did. Phil loves counter trend, man. That's his new thing. When the large chart says you can't go up anymore because there is no space. When the smalls get below the large. When there's a pink HVA line right at that termination condition, Pete says, I'm going to sell the ever-loving snot out of that pink line. I'm gonna make me some money. So guys, this is what we call an HVA trade. And a high volume area trade comes from your ability to recognize the termination condition. And it is stemmed from your ability to recognize when you're not fighting momentum. And it is dependent on your ability to not only call, but trust the entry spot so you can have the least amount of risk and the highest amount of profit. And dude, I'll take 665. It's the neighbor of the beast on a one lot all day long. Great execution, Phil. 100% rules met. Nubis, I think that was you. You might have gotten with tech. You might have gotten with tech. I'm not sure how that worked out. You're welcome. You put a lot of study in, Phil. That's the thing that people don't realize, is that nobody here is just arbitrarily getting lucky doing stuff. All these people that you're seeing win, and I guess I have to say it, posted a lot of losers in my room. And I think that's fair to say. And it was like, oh my gosh, Pete lost? Hell yeah, Pete lost. Pete lost his ass so he could learn how to not lose. Jen lost her ass so she could learn how to not lose. I lost my ass so that I could learn how to not lose. Guys, if you don't poke the bear every now and then, you don't realize the bear is going to rip your face off. You start thinking it's a teddy bear. I'm going to call this a strong bottom. Even though the second small peeked through, triggers up, rolled wide separation, clear path. I'm going to lovingly disagree with you on this being a strong bottom. Is this you, Pete? You don't get to change my rules. That's a weak bottom, right? But what preceded it? A weak top, right? Which means what? That this 50-50 is more likely to fail and the market will continue up. So, weak bottom, but proceeded with the weak top. But Pete, let's be honest, dude. Odds favorable momentum, room to trouble, pull back to an area inside of triggers. Who gives a shit? Sorry, that's wrong. Forgive me, children in the room. You don't need that bad boy. You've got momentum and path. You've got the perfect entry. You have the perfect trade with the ideal result. Great trade, Pete. But I got to get you on it. If the triggers break through, it's not a strong bottom. So if this were a 50-50 trade, that could change the dynamic of it a lot. But since it's not, who cares? It even says on your checklist it's not mandatory. Same trade. Same trade. And then you entered on the way up because price had already reached determination. Can I address this, Jen? And I'm just going to say it in a way that I hope comes across lovingly. I have momentum and path. Nope, I don't. I have momentum. I don't have a clear path. Trading directly. Yeah, you guys are in. She's trying to be like you right now. So Jen, I don't have a clear path, right? I'm losing momentum. And I am not taking the low risk entry. Instead, I am shortening the distance to the trouble that has already created a big ugly bounce. That's how I read this chart. I love the momentum, but I've already reached my target. It's already created a giant bounce, and now I'm just hoping that they retest it, and I'm going to give myself more risk and less room. It's what we do when it's not the perfect trade. Following rules, we talk ourselves into things. I agree with that. But Jen, we're always going to talk ourselves into stuff, right? I do. I'm notorious. But so let's think about it in just one way. And I'm just going to type this out because it helps me. If I am going to break a rule, I'll err on the side of the least amount of risk possible, because a confirmation bar, when the rules are not met, is not a confirmation bar. Right, Jen? A confirmation bar confirms that your great trade is now going in the direction. But there's a cost for that confirmation, and it's more risk. And if there's just not much room, so that's just one way to think about it. And Jen, with that much momentum, it made sense that there might be a little bit of a retest, right? But when you know that the trouble's already there, oh my gosh, you can say, yeah, for 6 ticks, I'll take that chance. For 16 ticks, hell, that might pull a big chunk out of my account, taking that chance. And that's kind of just one way to think about it, is if I'm already breaking rules and hell-bent on breaking rules, how do I do it with the least amount of risk? John Novak is so good at that. John Novak will say, well, it's only 5 ticks from where I'm getting in. I don't give a shit if they run me over. I don't care if I lose 5 ticks. But you'll never see him take what could be considered an assertive trade with an enormous amount of risk. And I think that's one of the things where the accuracy of entry pays dividends. You will learn to take chances. Why not do it with the least exposure? You're welcome. Good stuff. There's those railroad tracks. Keep buying the mid-band until it doesn't work. Wait for confirmation so you have a place to put your stop. And guys, I'm not telling you break your rules. Paul, I hear your brain spinning right now. Mark just said if I have a confirmation bar, F it, right? I can do it. Don't. It's easier to make money when you don't break your rules. Great job. Strong trending market. If you're already where the market shouldn't go, that pivot gives you a place to put your stop. Doesn't guarantee a win, but at least you have a place to put your stop. Strong triggers. So weak bottom, strong triggers, 3 through. And Pete's like, I don't like this at the fib. Look at the fight right at the area where decisions are made. Pete sees this. Pete goes, man, these yahoos, let me get every indicator point in the same direction. Let me get above that decision-making point, and we'll see if that momentum carries us to the next one. Nice job, Pete. That's great patience. That is great patience. Just saying, man, they're fighting. Let me wait till everything agrees, and then I'll take my shot. Good job. Same thing. We already saw that one. Boaz. All the momentum. Nothing in the way. Perfect entry. Ba-boom, ba-boom. So Boaz, the question would be, yeah, left early. So Boaz, why the confirmation bar? And this is the same thing. It's the same concept. If it's perfect, do you really need confirmation? All it does is add risk. All it does is shorten the distance to profits. If it's perfect, if it is everything you could ever hope for in a trade, guys, you may find that just trading the plan is a better option. You may find that just getting in at the area inside of triggers reduces your risk and gives you more profitability. It's still a beautiful trade. Still a beautiful trade. But I don't know that I'm taking a reversal bar directly into a 1-to-1, right? After divergence. And your small triggers are still down too, Boaz. There is, I mean, I could go with a fine-tooth comb and a microscope and not find anything wrong with that trade. Good job. All right. Is the 1-to-1s considered a termination here? This is Aaron, right? Strong triggers. Whose chart am I looking at? Is this Aaron's? I think the yellow text. All right. So, guys, give me a Y or an N in the room. Awesome. Awesome, Nubis. I'm glad that they got you. Jason is phenomenal, guys. Price reaches the one-to-ones. Where are my triggers? What do you guys think? I don't see any triggers through that area. Do you guys? Aaron, are you with me? Cool. So is it a termination? Yes. Yes, it is. That was the why that you're with me, not the why that it is a termination. Because no triggers are through, rule number 2 says no trades into the area. If you're following the KISS plan. But Aaron, can we high five, celebrate, do the happy dance, and go have a beer? Because you took the perfect entry at an area inside of triggers. And Aaron, what you have to realize is that 86.75, or is that 85? 85.75 is an area that can shut everything down, which means you had 4 points, brother, $200 worth of profit to get back to that area. And if you're following the KISS plan management, Aaron, that is a $300 freaking trade. You still made 150, but the KISS plan would have made it a $300 trade. Does that make sense? But dude, I don't care about the money. Do you know what I'm so freaking stoked about right now? Is that you entered at the area inside of triggers. That's okay. Who cares? Aaron, you're on sim. What was your one thing today? What was your one thing today? Everything else is noise. Aaron, great job. I'm telling you right now, guys, when you identify a problem and you work to fix that problem, the rest of it will work itself out. Aaron, were you here for the KISS plan ATM strategy? Let it run, dude, because great entries create manageable trades. Can you imagine making 300 instead of losing 50? How does that change your quality of life over time? Good job, dude. Seriously. That is, guys, that is why the classroom works. If you're vocal, if you post in the room, if you show me what you're doing, we will find a way to fix it. Not the automated system, Aaron. So when you enter a market, watch this. If I'm using the KISS plan and I enter right here, and I'm not saying that this is an entry, but if I use the KISS plan says that my targets are $100 and $200. That's it, $100 and $200. Take the trade, $100 and $200. Don't touch them. Because while you're on simulator, what you're doing, man, is you're building trust. You're learning how to get paid. You're putting your stops where the market shouldn't go. Take the emotion out of it. They either get hit or they don't. Who cares? We're on simulator. But Aaron, what you would have found is that instead of losing $30 or $50 relying on your emotions to manage that trade for you, is your great entry would have produced $300 and you would have been out of that trade before it ever came back to take your money. But if you lost $50 on this trade, it doesn't make sense. Because if you really entered at 81.25, how could you lose $50 if it never made it back to your entry price? So something doesn't make sense. Something on the annotation isn't truthful. Now the correct entry was 81.25. So you closed it out. Why? Because of the termination? Cool. That makes sense. Celebrate the victory of the perfect entry. Good recognition and being willing to take a small hickey. Good job. I got nothing but celebration for that trade. Nothing but celebration. That is such a huge victory for you. Embrace it. Triggers are down, rune to trouble, pulls back to the area, closes below, making money. Pretty cool, right? Rinse and repeat. Who is this? Is this Wayne? The triggers are down. There's nothing in the way. It pulls right back to resistance, closes below, and he makes money. And that is another $400 or so. Wayne, you're making it look easy. No wonder you got funded today. All right. Momentum, good. How do you say nothing in the way, Adam? Adam, help me understand your termination conditions. Help me understand how you're defining nothing in the way. Because what I see, and I want to make sure that I'm very clear about this, but what you and I are having a disconnect. I see the big blue fib. I only see 2 triggers above it. This is the potential to break, but it's kind of a crappy potential to break with only 2 triggers. And it's even more detrimental because it's a weak bottom. Were there really? There were 3 through this blue fib, not this blue fib? Okay. Cool. So you had 3 triggers through, which is the potential to break, right? My apologies. Things changed after the picture. You have a weak bottom, strike 1. You have divergence, strike 2. Between a weak bottom and divergence, that's going to be your result more often than it isn't, Adam. Well, if it was 3 in the moment, trade the moment. Hey, Kevin. Good to have you in here. Get used to talking lots, man. I'm here to help. So Adam, weak bottom sucks. It kills this trade so often. And then you couple it with divergence, it sucks. Well, it depends on the plan you're trading. I don't know what plan you're trading because you told me you're only taking KISS trades, and then you told me, well, I'll do it with only 2. So you took this one, the KISS plan rules, and you made an amendment here. And now you're making an amendment here. And you've made an amendment there. And even where it reminds you, no divergence. So what you're saying is that I hope that a couple strong triggers will break an area. Does that make sense? Hey, Wayne, have a good one, man. Congratulations. So, Adam, you are so far removed from the KISS plan. You told me that you were going to trade. One of 2 things is happening. Either A, you're justifying things because the way you feel in the moment, or B, you're not really focused on trading the KISS plan. And you don't have to answer it, and I'm sorry if that sounds like a kick in the clackers, but you told me I'm holding myself accountable to the KISS plan. So I'm going to do the same thing. This is an avoidable loss. Does that make sense? Guys, there you go. So it either is or isn't, right? And Adam, one of the things you can do, okay, and I think on a 50-50, Adam, that's one of the most important pieces of the puzzle. I really do. On a 50-50 trade, that strong top or bottom is probably one of the key factors in success. Because when I have a weak bottom, very often the market continues in the direction of the prevailing trend. Let's see if we can find some real world examples about that. Here we go. When it's a weak bottom, they typically try to push down again. When it's a weak bottom, they typically try to push down again. Weak bottom, that time they didn't. Weak top, they typically try to push again. It's like there's almost always another surge. Not always, but that weak top or bottom, that's my go-to. If I'm looking for a 50-50 trade, that's my non-negotiable. But if this were a strong bottom, Adam, I could overlook one divergence in my personal trading plan with a little confirmation, but that's the one. So remember, if you're going to trade a plan, guys, you got to trade the plan. And every time you alter the recipe, you change the probabilities, right? If I'm baking a cake and I put in I don't know, gravy mix instead of flour, I don't get the same cake. If I use salt instead of sugar, I don't get the same cake. So as you learn to follow a plan, be really hell-bent on sticking to that checklist, because it keeps you honest and it keeps you focused and it leans on advantages. And when you deviate, so do your results. Good momentum. This is not a good top. I believe it. Coming in, traded into the termination. So not a termination. And we covered this one, right, Adam? Not a termination, but that, remember that lesson that we just had from the weak top? You're likely to get a bounce. Yeah, likely to get a bounce from a weak top. So good recognition on the weak top. And then it becomes a strong top when they come back and test it. And then you have all the momentum, 2 triggers through. There's your divergence, but you're like, that's cool. With the strong top, look at that, 3 divergences, last one from a fib, lower than the previous, all the momentum, 2 triggers through. You do have divergence, but that strong top pays dividends, right? And it works out, and you make that money. Somebody leaked them, Jerry, and jacked them up. Are your workspaces all gone? I don't know what that means when he said that somebody leaked them. But they're not there. Chris took them off the site. There you go. They are in the plan that I give you, Jerry. In that KISS plan, there is a link to a workspace, though. Good stuff. And Adam, do you see how a strong top can be a little deciding factor, a little difference maker? They wanted nothing but down. Every time they tried to bounce, the sellers just really cranked over. Yeah, and I just dropped my workspace in there too, Jerry. But yeah, let me get you the plan. There you go. And let me see what that opens up to. There's the link right there. And when I open it, nope, that chart layout's not there anymore. So follow your link. Follow the link that I gave you, and that'll help. Where are we? Nope, we saw that one. Boaz, we saw that one. We saw that one. Aaron, Wayne, divergence. We saw that one. All right, here we go. Weak bottom, 2 triggers, divergence, disaster. Do you see the recurring, Adam? Do you see the recurring? And you weren't here this morning. This is what you have to see. And I'm going to show you real quick. I'm going to take a picture of that one. And I'm going to take a picture of that one. No one likes weak bottoms. Go do some squats, Adam. But what you'll find, man, if you're using your tracking sheet the way you're supposed to, somewhere over here, you're going to see weak bottom on a 50-50 loser, and you're going to start to see it repeating itself. And I think if you went back over your last 50 trades, you might see quite a few of those, right? So now you're recognizing, this is my thing. This is what I have to avoid. This is what's sucking money out of my account. So great job posting in the room. But that weak top and bottom is whipping you. And we saw that one and went over it. And we saw that one and celebrated it. And then weak bottom again. And then let's see, weak top, 3 triggers through. And that one worked out, huh? There's the one that works out. No divergence. So we're not giving up multiples, right? Didn't have the weak top, but you did have strong triggers, identifiable, and no divergence. And guys, this goes back to your checklist. The more you give up, the less likely it is to win. So Adam, only one thing missing and rock solid. There's a good lesson there. Momentum is up. The path is clear. Pulls back to the area inside of triggers and just missed it. Urgh. That's frustrating sometimes, Boaz. But I like that you go back. I like that you go back and annotate your chart and say, hey, even though I wasn't in this trade, this was a good trade. I want to make sure I don't miss it next time. Good job. Boom, 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 boom. Usually we're just so put out that we missed a trade. We don't want to go through that effort. But Boaz, that's why you don't miss a lot of trades. Because you do put that effort in. Because you do go back and you analyze the market even if you weren't in. And that is a very, very good characteristic. All right. Strong top. 2 triggers through, maybe 3 in the moment. No divergence. Adam, I'm seeing patterns here. Pull back to the area. Giddy up. Down it goes. Both targets hit. Holy crap. Could it be so easy that you just have to learn what the checklist says and what it means and then stick to it? Adam, perfect. Guys, I will sing some praises. What's up, Muser? Good to see you in here. Avoided the 50-50. Who cares? Waited for the perfect. Boom. Bang. No need for confirmation. Dunk, dunk. But he did it with split triggers. There's a lot of risk. So we waited for confirmation. Great job, Muser. You guys don't know this because you weren't here 2 years ago, but Muser was at the forefront of when there are these big split triggers, it's your right to insist on a confirmation bar if you want it. Boaz, that's the same way you took it. My personal 2 cents is if it is the perfect trade, I accept the risk, but not everybody's cool with that. Great job. Easy money. 300 and out. Aaron 1. Aaron 1-1. Do you see it? 300 and out. Make the money. Take the money. GTFO. Wait for the next trade because, guys, the next trade always seems to be right around the corner. Y'all are really coming up with some great lessons this week, and I'm thankful for each and every one of you. Weak triggers. I like this. So look at this. Weak top eventually rolled down. And then, Pete, did you see where it turned into a strong top? Where it pulled right back, did an elbow check, all the triggers below. Perfect. Strong triggers, 2 triggers through, pull back to the area, get in a little late, pull back to the area, make all the money. Beautiful. Didn't take it because it was above the fib. Trading the potential of that fib to break, right, Pete? It's still not broken here. Great trading. Nice job. You guys are so stinking cool. I want to be you when I grow up. Who did this? Good day today. 1,000, 5,000 with the trade copier. Is that you, Pete? Dag nabbit, son. What the hell do you do with $5,000 a day? Good job, man. Great trading. Wayne triggers down, room to trouble, breaks the area, pulls back to the area, closes below. And Wayne says, you know what? I'm going to get it a little higher, give it a little extra room since it didn't hit trouble. And out at trouble. Nice job. You want to be Pete? Moonwalk, let me show you something. Are you ready? See that X? Pete's been with us for 10 years plus at this point. Pete, were you always this consistent? Nope. You got to learn. You got to start with a foundation. So Moonwalk, if you didn't know, John Novak, the CEO, the guy that created the software, that's my big brother. And I tried for 2 years to trade like him. I tried for 2 years to do what he did. And I spent 2 years getting the ever-loving shit kicked out of me because I was beyond my depth. I didn't have the skill set that he had to do what he did, but I'm stubborn, so stubborn. And I struggled for a long time trying to be him. And just be you. We like you. And you're awesome, and you're going to be awesome. Strong trending market, almost the railroad tracks. Sell the mid-band until it stops working with the clear path. Little confirmation, right? Little confirmation, because where are you going to put your stop? And down it goes, and then divergence kills it. Nice trade. It is far from triggers, should close second faster. Oh, because they're, okay, I see. So since there's nothing to stop it, Boaz says, wait a minute, I took a trade, I made money, life is good, didn't lose anything, but I noticed that there's no place for a trend trade here. Hell, I could have taken that exit a little sooner. I could have tightened up right at the top of those triggers, and if it blows through, I'll just take another entry. Does that make sense, everybody? Boaz did some self-analysis that said, hey, because I can't define the next trade up here, I probably should have gotten out sooner. I want to show you guys something cool. It might have only been, what, a $30 difference? 2 points, point and a half. We'll call it $50. $50 difference. There's 252 trading days in a year. That's $12,000 from a little management hoop-de-doo there. That's 12 grand a year by eliminating one $50 mistake a day. Pretty cool, right? That adds up. I think about stuff like that because I think what that does is it really sets you up and you're thinking about it. Where's my risk? Is there another trade? And you start like just really moving forward with everything. Holy smokes, we made it through all the pictures, guys. Good job. So let's do a live chart read. What do you say? All right, moonwalk. You ready for the pressure? Who else is new in here? Guys, I'm going to tell you right now, if you play along with me, you will be a better trader. All right, so rule number 1 is strong triggers, right? It always is. It always has to be. Without strong triggers, I won't even look for rule number 2 because I insist on the advantage of momentum. So when I look at this chart, and I'm looking at the most current bar, and I notice that my trend is down, but my large triggers are up, and my small triggers are down. With the mismatch in colors, is rule number 1 met? And I kind of led the witness there. When the triggers are not the same color as the background, do I have strong triggers? What do you guys think? That is your first check before you ever even have to do comparisons. Hold on. Hold on. Let me go back to the strong trigger pick. The only way I can have strong triggers, and Moonwalk, this is what we do, and it's okay to not have the answer. This is my strong trigger look, always, 100% of the time. Colors match, space between. Are you comfortable with that? In a downtrend, colors match, space between. So what I'm doing, and this is what I do, is this is my strong triggers in a downtrend. That's exactly what it looks like. And this is how you're going to get good at it. Do the triggers here look like the triggers there? Side-by-side comparison. What do you guys think? Do I have strong triggers? No. Beautiful. Moonwalk, as brilliant as you are awesome. All right, so now we're going to go to rule number 2. Maybe you're like, you know what, F mark, I'm going to take it anyway without momentum. Do you see how price bars reach that area of support? So that's the first step. Price reaches an area. Moonwalk, how many of those trigger lines are below support? And when we do the count, it's either 0, it's 1. Well, we don't even do 1. It's either 0, it's 2, it's 3, or it's 4. So we're just going to count triggers when price hits a line. If it's 0, that line is a termination, and rule number 2 is not met. If there's 2 triggers, there's potential, but it's kind of meh potential. If it's 3, it's a potential breakout, much better look. And if it's 4, it's rules met, clear path. Does that make sense? So when price reaches this line, nothing that goes below that line is of any consequence to me. The only thing I'm worried about is how many trigger lines have made it through. Do you see how there's 0? Does that make sense, those of you that are just now learning the software, defining termination conditions? Has nothing to do with price bars. From this moment of impact right here, all I have to do is count triggers. Um, 452, I dropped it in here for you. I'm sorry, you split. And then I had a moment where I was like, oh crap, I didn't give it to him. There you go. So the lines are bad, no momentum. Rule number 1 not met. And then for rule number 2, Moonwalk, this is where we go through counting trigger lines if price reaches an area. So let's do it this way. As price comes up and reaches an area, are you looking at my big chart here? The moment it hits that line, I'm going to ask myself, how many of my trigger lines have made it above? Do you see how 0, all my trigger lines are still below the line? Below the fib? I want to make sure that you see that. Price reaches it. 1, 2, 3, 4 trigger lines remain below. That's a textbook termination condition, Moonwalk. And what that tells me is under no circumstances am I going to take a trade into that line, because that line could create a big ugly reversal. The same way when price hit those yellow 1-to-1s and all 4 trigger lines remained above, look what the market did from it. Do you see it? It's pretty ugly, right? We don't want to go short into that. So with no triggers through, Moonwalk, all we're doing is we're sitting on our hands, we're playing solitaire, we're petting the dog, we're doing anything other than initiating a trade into that line. That's your termination. That's when rule number 2 is not met. So far, so good? But areas break. So as the market goes up, do you see how 2 of the trigger lines? See, okay usually means, Mark, I have no freaking idea what you're talking about, but I feel put on the spot and I want you to shut up. I don't know if that's the case, but that's usually what it is. But once 2 trigger lines, both small, 1, 2, get above that area, you could say to yourself, Moonwalk, you know what? Now we're starting to get the potential. Now the potential for that area to break is there, but with only 2 of those lines through it, I'm not really interested in being a part of that. That's not my best look. That look's going to lose more than it wins. That's your, okay, the potential is brewing, but I'm still going to pump the brakes look. And this is what it's going to do in a live market. You're going to watch it form just like this. It's going to reach the area. 2 trigger lines are going to get above the area, and then Moonwalk, 3 trigger lines get above that area. See how all we're doing is counting triggers? We're not talking about price. We're not talking about the color of the fib. All we're doing is counting triggers. 1 trigger, 2 trigger, 3 triggers above that area of resistance. Now that area has the potential to break. And with momentum and 3 triggers through, there's a trade to be had in your plan. Pull back to the area inside of triggers, but you're waiting for the 3 triggers to get through. Does that make sense? And then once 4 triggers get through, we're not there yet, bonk, bonk. Now my path is clear. Now life is good. Did you get it, Jim? We're good? Now the path is clear. I love that. Some days I'm good at this stuff. And then it goes up, and then it just turns from the middle of nowhere. Stupid people. But let's do this. Bum, bum, bum. Do you see the momentum? Of course you do. You're brilliant. Separation between the small and large, right? Do you see how the market hasn't reached trouble and all four triggers are above the previous trouble? Moonwalk, that's the perfect look to look for an entry. And the market looks just like this. Are you with me so far? Here I have momentum. Here I have a clear path. Life is good. This is what it should look like when it's time to go look for an entry. And I'm telling you, you can do these bar by bars. Right here. The market is, whoa, what indicator is that? Holy smokes. Right here, right at the top of this bar, oops, is where that market is trading. So Moonwalk, this is where, you remember that phrase that we talked about? I'm going to buy a pullback at an area inside of triggers. That's when the small chart comes in. It looks like it's gone, doesn't it? You're like, oh my gosh, how am I ever going to make money? The market's gone. And it's trading all the way up here. So here's what we're going to do, and I want you to see why the language is so important. If my rules say I'm going to wait for a reversal bar, there it is. At the time of the reversal bar, the market is most likely to retrace somewhere from the top of those triggers to the bottom of those triggers. Do you remember that? I'm going to buy a pullback at an area inside of triggers. So Moonwalk, this is my retracement zone. I want you to look in that zone. Do I have a fib in the retracement zone? I don't. Do I have a mid-band in the retracement zone? I don't. Do I have a yellow 1-to-1 in the retracement zone? I don't. So Moonwalk, even though the large chart is spot on perfect, you can't define your entry on the small chart because the rules aren't met. Does that make sense? And this is why I really harp on the language. Large chart had momentum. Large chart had a clear path. It's perfect. It's great as it's ever going to get. But the small chart, because all of my areas are below the trigger lines, I can't define the trade. I don't know if, when, or where the market's going to bounce. And I want you to see something. They blow right through it when rule number 3 isn't met. So what it should look like on a small chart for the perfect entry, I love this. I love it when you guys let me teach these lessons. In order to have your rules met for entry, Moonwalk, there's a good one. It's going to look like this. When the large chart rules are met and we go over here to look for an entry, there has to be an area, a fib, a midband, or yellow 1-to-1, and it has to be inside of those triggers. Because once you get below them, you just don't know if, when, or where the market is going to bounce. So trigger lines will show you where the areas need to be, but the areas will show you where the trade originates. And if you look at your chart and there are no areas inside of those triggers, that's where you say to yourself, it's just not my trade. I can't define an entry. I'm not going to just hope that it works. And very often, it's an avoidable loser. Does that make sense? That's a good example. So look at the difference between the two. Area inside of the retracement zone, that's where the bounce comes from. No area inside of the retracement zone, that's where we avoided a loser. It's the same pattern every time. And that's why I say, let's use the language. Let's say that we're going to buy a pullback at an area inside of triggers. You will always know where your trade's coming from before the market ever gets there with just a little bit of study. And all it is a pattern. So as the market goes up, we avoid that loser. Whoops. And then this is where we were having the discussion last time. And it's the exact same rules. So we decided that there wasn't momentum, right? Do you see how all four triggers are above that line? That line's a termination condition. So until, let's see what happened. Now it has the potential to break. Whoa, they cranked it. Now it's got even better potential to break. Damn it, they hit the next line. Right back into the next termination condition. And you can see it over here. Now this little blip right here, you may catch that a little later in life, but it doesn't really fit rules because it's directly into a termination. So what I want you to do just really now, whoops, if price reaches a line and all 4 triggers don't get below, it's not your trade. And you don't see it on the large chart yet, but do you see how there's already a little bit of violence occurring on that small chart? That's the people in charge fighting one another right at a key area. And this methodology is designed to keep you out of that fight, to keep you from trading directly into something that can create a bounce. Good lesson. And you probably won't have it down pat after this one conversation. But if we keep doing this every day, you'll be absolutely floored at where you end up. And then here we go, a little girl power for you. Remember when we said 3 triggers? Define your entry. Jen took the trade, accidentally took it on one contract, but she took the trade live because it fits the pattern. And then you'll notice she didn't take the trade here because Jen knows the rules and she knows that that's not the right look. And it takes a while to learn these looks, and it takes a while to get that study. I tell people by day 4 or 5, and you're on 3, maybe 2 because you were sleepy one day, you'll begin to recognize the pattern, and you may not understand it fully, but you're going to start to say, oh my gosh, it really does do the same thing all the time. Oh my gosh, they can predict where the market is most likely to continue. So give yourself a little bit of grace. That's my wife's word. Give yourself a little bit of grace. As you're a brand new user, you're trying to piece these concepts together. So that's why starting with momentum is great. It's the easiest lesson. But then you've got to start counting triggers, thinking about the path and not the money. And then you've got to learn the language, pull back to an area. And I'm telling you, it's not a difficult endeavor, but it does take a little bit of study and it does take some repetition. And one of the things you can do, and maybe something to do over the weekend, I'm not sure when you go back to work, is on this spreadsheet, the green sections are what it looks like to have the rules met. So what you could do, Moonwalk, if you were feeling a bit awesome, is you could just go back and look for instances. Let's see if we can find one where price reaches a line and no triggers break. And you could take a picture and you could start describing why it's a termination condition. And then when it happens next time, you're ready for it. And then when it happens next time, you're ready for it. And what you'll find is you're like, oh my gosh, this isn't nearly as hard as I made it out to be. It's just some new language, but there is extremely specific language to keep you focused on embracing those advantages. Day 3 is when it starts to click a little bit. Miss Jen, you're welcome. You're welcome for the amazing week. And I'm so glad that you learn every day from me. That's my goal. Close it down. Go have a great weekend. Go make some dinner. And we'll see you Monday. We will see you Monday. It is a little bit. Today's the little bit day, Moonwalk. Monday will be the little bit more day. And nobody in this room is going to lie to you and tell you that they got it in the first week. They know better. I'm not going, Nubis. I got you. Have I ever left you hanging, brother? Ever? So Moonwalk, we're going to turn the fire hose probably into a garden hose. You want to know the truth? He was a bartender. He was a bartender that got a sales job with a company that helped people trade futures. In Moonwalk, he met a gentleman, and every morning, I love telling this story because I had no idea my brother was this smart. He met a gentleman, and every morning they took these Fibonacci tools and they did that. And then they took the next Fibonacci tool and they did that. And then they took the next Fibonacci tool and they did that. And they did all of these manual calculations, and they started looking at where things lined up. And to be honest with you, Moonwalk, this is a colossal pain in the ass that takes hours before the market opens. And my brother, he's stubborn like me and maybe a little lazy. No, he's anything but lazy. But what he did is he said, there's got to be a better way. And he's very much, he's always thinking, always happy but never satisfied. And he said, what if I could automate this process? What if I could get tens of thousands of calculations together to give me the most accurate and write an algorithm to put the lines in the right spot? So what he did is he started working on it. I want to say it was close to 2 years before it actually came out and the software was launched. But he did those same calculations that I just did manually, and he did it over 10 days historically. And this is what the software does. And he measured every swing, every pivot, every up, every down. And then he created synthetic timeframes, higher timeframes, lower timeframes. And this is what it looks like before the algorithm runs. It's an absolute cluster foxtrot Charlie of lines. But then the algorithm kicks in. And you get some pretty solid areas that can behave as highs and lows. And then we just took some momentum indicators and some patterns that repeat themselves. And we hand you guys such a beautiful plan. But he was a bartender that took a sales job. And it just clicked with him. And he created Nexgen. And we've been around for nearly 30 years. We've been around for nearly 30 years now, teaching people to day trade markets. So that's the story. That's the origination. And do you know what really inspired him, Moonwalk? And people don't know this. So my brother, when he was working for the software company, he took a 2-lot trade on the S&P. And back then it was $500 a point. And he took a trade. And we'll just say he went short right here. And when he got here, he tried to flatten his trade for $1,000. And what he did is he sold 2 more. And somewhere down here, John Novak lost $20,000 as a 24-year-old. And when he lost that $20,000, instead of getting mad, and this is the phrase, and I love this story, he said, if I can lose 20 grand overnight, I can make it. And that was it. Like, they called him, margin call, showed him the video, played the recording of him saying sell 2 more. And he said, if I can lose 20 grand overnight, I can make it. And that is what spurred the origination of Nexgen Software Services. It's a good story. I think it's a great story. I grew up swimming in creeks and doing weird shit and swimming in ponds and shooting BB guns with him. I had no idea he was that smart. But it turns out that he really is. And I like that story. And I think it's his root in... No, there's nothing close to this. It's the best software out there. I say that confidently. John Novak used to tell people, if you can find something better, buy it. Let him know what it is. He'll buy it. All right, Aaron. This was you, right, Aaron? Giving me an unannotated chart because you're too busy taking pictures instead of managing your trades. I love it. You're excited about it. This is you, Noobiz. What the hell happened? How do we know if we followed rules? All right, so I'm going to make you answer the questions. Are you ready? Well, then why did you send this one if you were going to send another one, silly? We'll get to it. Hold on. And guys, I'm not going anywhere. If we run over, we run over. That's the same picture, you yahoo. All right, last one. Waited for strength, got in but got stopped out. Cost of doing business. All right. How do you define strength? Strong triggers, right? So, did you have strong triggers? Yes. Did you have a clear path? You didn't talk about it. What do you think about the clear path, Nubis? You thought I did. Why? Because price didn't reach an area? Because 4 triggers are below the previous line? Sounds like a pretty repeatable recipe, right? Now hold on. Now you almost waited for the pullback. Almost waited. So I want to do this. The rules say, and they're pretty good rules. The rules say that I'm going to sell a pullback at an area inside of triggers. And guys, repetition is the key to recognition. So Nubis, you waited for the reversal bar, and then you said, oh, shnikes, I'm going to jump in. So your actual entry was at this area inside of triggers. Does that make sense? Just a little early, but man, the thought process was good. The thought process was solid. Just a shade early. Stop where the market shouldn't go. And about 5 ticks. What are you trading here? Is this the YM? 6E. Okay. I don't know anything about the characteristics of the 6E, but so I don't know if it's 4 or 5 ticks on the 6E. I don't know how it overruns, but that's okay. You're still in. Didn't get you, right? Anubis, this is great. You had momentum. Your path was clear. You defined your entry. It's a little bit early. And you put your stop where the market shouldn't go. Rockstar, high fives. Good job. All the way around. Now, are you ready for the next lesson that makes you an even better trader? Do you see that higher divergence? That's your exit condition. That's it. That's your management condition. That is the, oh man, it's probably not going to go look, or it might go higher. But yeah, dude, who cares about the results? You were 3 ticks from perfection, my friend. 3 ticks from perfection. And who cares, right? It all makes sense. Great job, dude. Great job. Guy's making me proud on a Friday. All right, let's see what we have. Triggers wide. 4 triggers through. Entry at the area inside of triggers. And they got you. Aaron, perfect. 100% perfect. Not every trade is a winner. 100% perfect. 4 triggers through, separation between the small and large, entry at the area inside of triggers, and then the only thing is that your stop could have been maybe just a little bit higher. But no, your entry is perfect. Aaron, are you with me in here? Entry comes from the highest point, closest to the reversal bar. Stop goes 4 to 5 ticks below. So you might have given up about 3 or 4 extra ticks on your stop than you needed to. But dude, it's rock star solid, perfect. Every lesson adhered to, every rule met. Entry perfect. Stop makes sense. It's just, that's a cost of doing business. That is a cost of doing business. That is a cost of doing business. Great job, Aaron. How hard is it to wait for the market to come back to you? That's okay. It is difficult seeing a $200 loss. Is that a lot? You know what? So let's talk risk, right? Aaron, if you're not comfortable losing 200 bucks every now and then, you're going to struggle with futures trading. It's going to happen. Or you need to go to the micros and turn it into a $20 loss if that suits you better. So people always ask me, Mark, what's the risk, man? What's the risk like? So the risk could be a number, right? Like 200 is your risk, and that's what you base your risk on. Do you know what I think risk is? Not taking the perfect trade. Not taking the trade that I can prove wins more than it loses. Not having the advantage of momentum to push the market. Not having a clear path. Not being able to find an entry area. I don't care what the number is. That's a risky freaking trade. This is the perfect trade that didn't work. And what you did is you just paid rent on your storefront, Aaron. And that's what trading is. You have to be just as okay with losers as you are happy about winners, because there will be losers. It's hard. I know it is. It's easy for me to sit here and say that. It's easy for me to sit here and say, you better get used to losing. I can't remember the last time I didn't lose a trade during the day. Can't remember the last time I had a day without a loser. It's happened, but it's so rare. It is so rare. Because the market gives losers. But we can avoid them. You blew a $5,000 account. I like it. Everybody's done it. Moonwalk, do you want to see my story before we call it a day? We've got all the pictures, right? Let me read Pete's, because this is important. This is wisdom. For you new users, when I started with Nexgen, John Novak was running the room, and you had to have your man pants on because John Novak doesn't pull any punches. He's not touchy-feely like Mark, but it's tough love because John Novak wants everyone to succeed. The reason I'm still in the room 10 years later is I'm constantly learning, and Mark points out when I make mistakes, makes me a better trader. Thank you for that, Pete. I appreciate that. And I am way more touchy-feely than my brother. So, Moonwalk, here's my path with Nexgen. And just a little context of my life. I was in the restaurant industry for nearly 30 years, not consistently, but I was the GM of, what part of the world are you in? You don't have to answer if you don't want people to know. But there's a Tex-Mex restaurant that was founded in Austin, Texas called Chewy's. Okay, you're in Colorado. There's a couple up there. And I was a GM for them. My whole life revolved around the service industry. And in 2020, 3 months before the world shut down, I had my second spine fusion. And it took me out of the restaurant game. And I was good at the restaurant game. I loved it. It was fun for me. And my brother, who is constantly trying to do for, he's a doer. He's a do for his family, do for his friends. He's like, all right, Mark, it's time for you to learn the software, right? It's time to change your life. And he handed me the software. And he gave me one of his NinjaTrader accounts. It was 100% zero cost for me to get into this, which is an enormous gift that I'm realizing later in life. But when he handed it to me, Moonwalk, and everybody in the room, pay attention if you've never heard this story, because it's actually a pretty good story. He told me to do 3 things. And he said, Mark, I want you to write down the rules for this trade. And I said, John, go to hell. I'm smart. I don't have to write anything down. And he said, and then I want you to practice, and I want you to take pictures, Mark. I want you to take pictures of the perfect trade. Don't even trade. Scroll back. Find the rules. And I said, John, kiss my ass. My last name's Novak. You own the company. I'm going to be rich beyond my wildest dreams because I'm entitled. And he said, Mark, practice and post in the room. Let's make sure that you're not screwing up the lessons. And I said, John, I don't have to post in your room. I know I'm amazing. And the simulator tells me I'm amazing. And he goes, Mark, just put them in the spreadsheet, seriously? I'm like, John, what the hell do you know about day trading? And I decided that if I did it his way, it was hard. Feels like work, right? I don't want to work to make millions of dollars. I just want to make millions of dollars. And I had no idea what I was doing because I didn't follow the path laid before me. I didn't participate. I didn't take pictures. But in this range right here, Moonwalk, I got lucky on simulator. I was a simulator freaking millionaire. I could do no wrong. I had no idea what I was doing, but holy shit, I was Monopoly money rich. So I went live. And when I went live, it took 21 trades over the course of 2 hours and I lost 5 grand. I lost it that fast, almost instantly. And the sad thing is I had absolutely no idea why. I thought the market hated me. I was mad at my brother. Um, and I think this is everybody's story. Not everybody's willing to admit it. So Moonwalk, what I did, and this is the important part of the story, is I got beat down to the I don't know shit stage. So when John said, "Hey Mark, you can't go back to the restaurant industry. You're halfway decent with people. Why don't you teach a 101 class?" What I did is I started teaching and presenting the path from right here. If you walk into my room and you don't know shit and you just say it, I don't know what I'm doing with the software, I'm going to follow the path that has been around for 30 years helping people find success. What happens is you can eliminate a lot of this heartache. Well, Moonwalk, you've already had the heartache, right? But we're breaking up with that dude. We're looking for the new one, or girl, I don't assume, whatever. And we're going to start right here. And when you do it, there will be little blips. And I don't think that timeline is 100% accurate. You'll be like, yes, here we go. I'm starting to get it. It's starting to click. I'm so smart. I effed it up. No, wait, I've got a great foundation. I'm doing great. I got too smart. I effed it up. No, hold it. Here we go. This is awesome. Oh, son of a gun. And then you get it. So I think it's more of a cha-cha. But I've done this, and I did that, and I did this, and I blew it out here, and I screwed everything up. So when I teach this room, there's a couple things that I really try to hold on to. The first thing, and the word that pissed me off when I was learning the software, and Pete, you probably remember this word, it's obvious. And I used to hear that in the room all the time. Well, it's obvious. Well, it's obvious. Bullshit. It's not obvious. It shouldn't be obvious. We're brand new, right? Nothing is obvious. A hot stove doesn't seem hot to a 3-year-old, guys. So we all start here. So when I teach my lessons, I don't say, oh, you got to have strong triggers. That's easy. I'm going to the next one. We talk about the looks. It was obvious to him. Learning to trade the software from John Novak is like learning string theory from Einstein. He's brilliant. He can't come down a level. He can. He's actually an amazing teacher. I had a buddy that had a perfect score on his SATs in math, and he tried to teach me, tried to tutor me in college algebra, and he couldn't do it. He couldn't get that stupid. So he was a horrible teacher, even though he was brilliant. So luckily for you guys, I'm pretty stupid. And we approach it from there. So Moonwalk, that's my story. Don't get dejected. You're right where everybody is. You know what you're doing. You can read the candles. It just doesn't work when I do real money. So Sim is great. Do you want to know why it doesn't work on real money? Because you're not doing the same thing. You think you are, but you're not. Somewhere there's a variable. What you're doing on simulator is probably taking chances and almost being right, almost trading the pattern, almost following the rules, because simulator creates ovarian fortitude. Well, the discipline's on you. The system will give you a trade that you can believe in. The system will give you a trade that you can test. The system will give you a trade that you can prove wins more than it loses. And when you learn to trust that it actually does, you'll begin to focus on the process and not the results. That tends to be where it goes. But the more variables you throw at it, the less likely you are to build that trust. I love it. I love it. So can I change your goal for you? You ready? I'm going to be that guy. I'm going to be that guy, Moonwalk. Stop making your goal to copy trades and be rich. You're not there yet. You're not there yet. Why not let your goal be small, obtainable goals? I'm going to get so good at recognizing momentum that I see it in my sleep. And then I'm going to couple that momentum with my study on a clear path and make sure I'm putting myself in the best possible position. And then I'm going to learn how to define my entry. And then I'm going to be so effing focused on never breaking these rules as a brand new user that trading becomes easy and effortless. And then moonwalk, this is the process. The process is the trade that you can prove wins more than it loses. And then probabilities says if you follow this plan, you should win more than you lose. And that's what we call an edge. And it's the process that yields results. That's it. That's it. You never did CPR on somebody and got them back because you wanted them back. It's because you went through the process of doing CPR correctly, right? At Christmas time, pulling ornaments out of people, you didn't get it out because you willed it out. Yeah, my wife was an OR nurse. I've seen too many of those pictures. Make me sad. But it's the process that yields results, right? So let your goal in the very beginning become an expert at the process. Become an expert at following the rules on that one trade that you know wins more than it loses. And then from that process, you start getting creative and finding all sorts of ways to make money. But look at this, momentum, 3 triggers through, pull back to an area inside of triggers. That's the process. And that's the results. Whoo, from behind the pulpit on a Friday afternoon, my friends. That's it for me.